Daniel Trejo was in an apartment near 11th and Denver last night. They say he was holding an axe that he wanted to buy from someone else. Officers say the victim was sitting on the couch eating, and the two hadn't spoken, but police say Trejo swung the axe and it got stuck in the victim's head. They say the victim is not expected to survive. Officers later arrested Trejo near 6th and Peoria. Police say there were several witnesses and that the whole thing was caught on security cameras.
Good morning, everyone. Ding ding. How's everyone doing? Straddling the FOMC announcement? Probably. GME and Upstart about to touch tips. It's a bit unusual. I don't know what the fuck you're talking about, Robeer. Ooh. Why is the market dropping so hard at open? Are we gonna crash before the announcement? Do I buy our calls back or let them ride today? Why would you... Oh, because of this? I don't think this is gonna last very long. We crashed? They're trying to censor me? Oh, come on, the Ortex guy. The guy from the interview? FOMC minutes well, the interest rate decisions released at 2 p.m. SPX gonna chop at 38.25 until FOMC? That's possible. Yeah. Thanks, Mr. Goals. Another rate hike means stronger dollar. Yes. Yes, it does. Danny, the infinite risk. I still don't know why people have been talking about a pest control company all week. uh if people read the daily DD, they know this open VUPs were anticipated. Not necessarily anticipated, but I did think it was a possibility. I actually didn't know what they were going to do at market open because arbitrage was neutral, but they generated a bunch of liquidity before market open. So I figured internalization has been kind of high and the market's going to be, either a little down or stagnant. So this is a great time for them to offload internalization from all of these stocks. And they know the market's going to be stagnant, right? 381, then 385, then FOMC, then dip to 382, then rocket to 395. I hope so. That'd be ideal. What's the whole composite man thing? There isn't one. I think walk-in might just drink too heavily after the market closes. institutions are constantly in disagreement with each other. How low do you think Google can go? Looking for a long-term buy and hold. Is 90 a good entry? You know, it's not terrible, Sir Brohamdan. I think you can get it cheaper if you're patient. So something to consider maybe. Nope. I'm just fucking muted on Discord. Sorry. The dollar will dunk on all currencies. I mean, it's one of the only reasons that I could think of the Fed moving towards a pivot or a slightly reduced rate at today's meeting. Is the composite man in the room with us right now? No, he's in Walken's closet. Can you remind us how to read the chart? How many days from settlement date would you expect the FTDs to hit? What? What? Oh, the ETF FTD chart? Market maker FTDs are T plus 2 plus 35, although that's really unreliable. They generally clear them long before then. And they're a cumulative total. ETF FTDs are almost always marked long and cash settled. So ETF FTDs occur on T plus 6 plus 35C plus 3. So it's T plus 6, which is the T plus 5 authorized participant exemption, plus the following morning because it's cash settled. And then the 35C is Reg T, and then the 3 additional days is an estimate, actually, of ACH transfer times. For some ETFs, depending on which ETF, they have a 2-day transfer period for ACH transfers. So when they're cash settling. So every ETF FTD due date is +1 or -1, but we look at the whole 6-day window and look for concentrations in it, which improves our accuracy. If Jimmy runs from the Fed rate news, it probably won't. They'll probably just internalize most of the upside pressure, depending on how much upside pressure there is. If it does run, you know, the second the market stabilizes in a range, then GME will probably come down from there. Don't forget that the upside on GME is just loaded up with negative gamma. So, our ability to move, up into like the 28.50 and $30 range is very limited already. Why can't you just do the right thing and keep us updated in the daily DD on where we are on the VW squeeze chart? Oh, yeah, you know what? I could do that right now. Fluffy. Actually not a problem. Let's see. I like this image. Oh, that's terrible. So many of you have seen this photo before. This is the VW squeeze chart. We're somewhere around this period. Oh. Let me get a better yeah. Somewhere around here. You know, I'll just turn my face off for a second. So yeah. Is that working? Okay. Shell. So you're saying the price will go up? Well, yeah. I mean, long-term value will eventually be realized, hopefully, or the company will fail at achieving its goals. You know, just like any other company. Yeah, I don't think we'll go back to 30 during the ETF FTD covering. I wouldn't be surprised if we drop below 2750 before next week. And then ETF FTDs probably won't amount to, I mean, there's only one really good day of them. All the rest of the days are pretty slim pickings. And I would say that one really good day is not huge. So maybe like 5-8%, most likely first thing in the morning. Rapid price increase. And then once they get that liquidity back, we'll maybe see XRT fall off reg show. And we'll probably get shorted below gamma neutral. I mean, provided they follow the same, you know, kind of pattern they have before. That's $177.80. Split adjusted, that's about $40. 40 to no, 45 maybe. Do you have to wait for a bull market for more March OPEX type events? Well, March OPEX occurred in a bear market, so no. I do think that in a bear market, we need the indices to rally alongside us. But, yeah, that's also just because how volatility positions are positioned in the broader market in a bear market. So if you guys remember, like, we had negative beta back in 2021, and that's because, you know, when volatility spiked, you know, the markets were dropping and GME was going up. Now it's more synced up because we're in a bear market, because volatility positions are positioned on the indices the same way they are on GME now. Do you have a neutrals update for today? I do. Well, I like to get rid of the potential viewers that may come over here first thing in the morning, you know? That makes the rest of my day a lot easier. I don't have to hear questions like, do you really believe there's no MOASS? Or what do you think the actual short interest on GME is? Things like that, you know? It saves me a lot of headache, and then I don't have to dash their hopes on the rocks. Thoughts on Upstart? Do you think it could move lower this week? It could. Yeah. They have earnings coming up next week. I wouldn't be surprised if we're either shorted towards earnings or, we see a short after earnings. Both of those seem like a distinct possibility. Upstart will be stabilized to some degree by the obscene amount of FTDs it has. So that kind of helps. If FOMC news is neutral, we still go up, right? Probably, yeah. Oh no, we'll have run-ups, but that has nothing to do with long-term short interest. The MOASS theory implies a fundamental misunderstanding of how markets work, how liquidity in the markets work, and how shorting works. We got one MOASS, okay, but what about the second MOASS? Dead serious? Are you saying GME won't hit $120 and we won't be able to co-host a member stream? Oh no, it could. It might just take 5 to 10 years of consistent growth and reinvestment. Cube, point exactly on the GME chart where MOASS died. Oh yeah. Yeah, I would love to do that. I don't know if you guys remember last year when Ryan Cohen so graciously released a significant number of shares into the market in order to generate shareholder value. It was right about here. This is when MOASS died. Not just because of his share release, but also thanks to about 12 million shares sold off from ETFs immediately afterwards. Then, just as things were getting spicy again, because we never stopped buying, he split the stock, ensuring even more liquidity. Thanks, Ryan. And a stroke of genius, turning all of us degenerate gamblers into long-term shareholders. Why was the ETF sell-off? We got moved from the Russell 2000 into the Russell 1000. In the Russell 2000, we were the largest company. In the Russell 1000, we were one of the smallest. And so when the weighting shifted, a significant number of GME shares were sold off out of ETFs, providing liquidity to the market, which allowed them to clear out outstanding FTDs once again. I'm starting to think this Robert Cohen guy doesn't want to squeeze. I mean, it's almost like it would be really damaging to the long-term value of his investment. Think of all the other super amazing companies that have had short squeezes, right? Remember the infamous Apple squeeze? Oh yeah. That didn't happen. Yeah, they're beneficial to the company in the long term. It's better to not have a squeeze. Nobody likes volatility, and you can't get institutional investors, and you can't get institutions, more importantly, to buy your fucking bonds if you squeeze them out of their positions. You flip that MOASS explanation. I need to show my son who hangs on to hope, and keeps showing me real estate listings. Let him dream, Jen. Let him dream. Because if it doesn't happen, he'll have a goal, right? Will the Elizabeth Warren letter influence the rate hike? Absolutely not. Are you shorting NVIDIA at these levels? No, I'm waiting to enter my position still. The squeeze where MOASS died is where GameStop got recapitalized and the company became legit. Yes. At this point, would you ever invest in the same company as RC going forward? I'll see what he does with GameStop. I mean, yeah, because there's money to be made. I made like, I don't know, a couple 100,000 off BBBY. That was nice. I could have made a lot more, but if he didn't rug pull the shit out of it. So yeah, of course. But long term, are you still holding Apple calls? I am. I have some November 165s in December. Can you tell us the story of Volmageddon? Yeah. Asymmetric tails in the market became unstable and short volatility positions collapsed. Volatility spiked and we flash crashed. I wrote a DD about that. You can look for it. You might have to actually search it on Reddit. Could Upstart see significant price improvement during FTDs? I doubt it. If we do, it'll be like yesterday, where we see it in the pre-market, because most of them are FTDs. Will Palantir ever squeeze? Man, as someone who owns a lot of Palantir, let me tell you, I'm not sure if they'll ever actually make money. So wait, you're telling me the GME financial system overhaul was just poor people trying to get rich? Yeah. Yeah, hope is a powerful drug. Can you define all the terms you just used in the tale of Volmageddon? Can you explain asymmetric tails? So when you when you use volatility as a product, right? Volatility is is how risk is defined and priced for the derivatives market, right? And so when you're trading volatility as a product, you can create asymmetric risk, which, essentially means that, you have effectively shorted volatility to the point where risk is mispriced in the market, right? Which is a really big deal, because if any real risk actually does pop up and it is mispriced, obviously the price of risk has to find a mean, and that triggers extremely volatile event market wide. it's not something that's going to ever stop now that it's begun. It's probably something that will become more frequent as time goes on. By constantly mispricing risk in the market, you destabilize the market and increase volatility, which makes you want to short it even more. A lot of Apple bears out this week. It feels good to be contrarian, unless they're right. Hoping we can both be right. Short bull, long bear. We'll see. It's okay because, calls are cheap. So we can, the bulls can buy more of them than the bears can buy puts. Are we like a hedge fund volatility cult? Sure. Either Arsene is exactly the day to sell since the market tanked immediately after, or the effects of meme stocks make the market tank. It's possible. Why doesn't WeBull show SPX options? It does? You might have to turn them on. I'm not sure why you wouldn't be showing them. If you're looking at the chart, you have to go to chart settings and select options. Or you have to add the, not chart settings, add a widget and add options to SPX. What do you see as the outer bounds to the SPX melt up, down today after the hike and press conference? Leveraged call side positioning goes up to like 39.50, 4,000. Put side positioning goes down to about 37.50. Most of the positioning right now is fairly delta neutral, so expect a lot of volatility as the legs are closed out after the announcement. When did you buy those GME calls? Last night. Today was T+2, so I figured if there's going to be any action, there might be some this morning. And then if I do have to buy my calls back at the end of the week, which I probably won't have to, but it's possible just because there's not a lot of put interest at 27. If I do have to buy them back, that kind of offsets the cost. Pulte gonna hold for 69 million a share. I'm sure his father's proud of how well he's capitalizing on their business. Are these tails here in the room with us? Always. Is DFV still holding GME? I can't think of a reason for him to sell it, given that his position is large enough to make, like 200 grand a week on far out of the money cover calls. Gherk, you were wrong about the Who's in My Mouth game. That was not a good game to play at a party, especially not a family dinner. Listen, I told you to play What's in My Mouth, and I did not tell you to play it at a family dinner. If SPX hits 38.25, is a good time to go ahead and enter the call side of my straddle strangle today. Could be. Do you think a bearish FOMC outcome could neutralize GME FTD obligations? No, it doesn't really have anything to do with it. Could we start running from a lower price? Yes. again, I don't think the ETF. I want to make this really clear because I sense a lot of like anticipation and FOMO building up. We have one strong day of GME FTDs. If you compare that to August, in August we had 3 very strong days of GME ETF FTDs. So careful with that. It could lead to some price improvement, but it will probably be one, very short lived, two, not that substantial. More of like a morning pump and then a fall immediately afterwards. Kind of like Monday, but maybe not as much volume. Is it safe to say that buy and hold is what MMs want and thrive off of in order to facilitate volatility, ergo cyclical VUPs? Think of it this way, all right? So you have GME in a normal market, right? And here's all the shares of GME. And if you want to create volatility, you have to put capital in, right? And this excites all the little GMEs, and they start moving around a lot more, right? And they become more volatile. DRS reduces the size of that, but it does not reduce the liquidity, right? So you still have the same number of available shares, except you have to put less capital in to create an equivalent amount of volatility. So if you're short volatility, this scenario is ideal because you don't have to expend a lot of capital to create volatility, but you can make a lot of money shorting the volatility after you've created it. I dropped my mouse. Started watching stream reruns, figured I'd buy some spurt tomorrow to catch the run, but can't find the ticker to buy options. Do I just call my broker? That was a long time ago, and spurt is now a different company. I can't remember the ticker. Why would he want $1 million a month for at least the next 24 months? Terrible money, yuck. Exactly. How much is 200,000? It is 200,000 $1 increments. What's the FTD day, please? November 7th. It's in the daily DD that no one ever reads. What's the possibility that they clear a lot of them in the current VUPs? There's some. Next week plan is to sell a spread of out of the money, slightly in the money CCs on GME for 11.18 on a spike from FTDs. Historically, this is a good plan, correct? Risky, because November OPEC settlement period has a holiday at the end of the settlement period, which means that covering may begin before. So if your plan is to sell them for 11.18, you may want to consider that you might have to buy them back early and during that week, or you could sell them for 11.11 and probably not have to worry about it too much. ETF FTDs, same like Octopex. October we didn't really have very many ETF FTDs. They were pretty low. September we had a decent number of them. We saw a small price bump. August we had a lot of them. From like I think it was like August 5th through I think 8th was the peak of the ETF FTDs for August. Depending on how many we have, their effect can be enormous or mediocre. In like February of this year, we had a really big ETF FTD event from like Feb 8th. I think it was like Feb 8th and 10th were the big days. I'm trying to remember all the dates. Those are the ones that kind of stand out to me this year. Last year, obviously, like November 3rd, we had a huge number of FTDs. They also de-risked. Early October last year, we had a lot of ETF FTDs. Early August last year, we had a lot of ETF FTDs. So they're consistent, and trackable. So we know when we have a lot of them and when we don't have very many. In October, I was pretty clear that we didn't have a lot of ETF FTDs. They were mostly flat. I don't think we had any days over 500,000, and they were consistent but mostly flat. Why did SPX become the hot kid on the block as far as options are concerned? What are the pros and cons? Well, it became. I already traded SPX this whole time. I just didn't trade it on the stream because it's very risky, and I don't want people that were kind of unprepared gambling on it. It is very risky. You need to understand how to hedge positionally. You need to know how to open spreads and protect your risk. It's very gappy. It's very expensive. It does have a lot of advantages, though, especially when the market's very illiquid. SPX is more liquid. And then also it's tax preferred. So when you take gains from it, it has a tax treatment that accounts, it makes so you get 60% long-term capital gains from your profits and 40% short-term capital gains, which obviously makes it much more attractive than trading like SPY. That 1 to 2% move you mentioned, sorry, must have missed that, man. 1 to 2% move you mentioned, depending on the rate increase, are you expecting that today or by Friday? I mean, we could see it immediately. I think if it's downside, it'll take a little longer to be realized, just because the positioning isn't there yet. So if the Fed comes out super hawkish with a bearish rate increase, and we're gonna move down, I think that'll take a few more days, just because of where positioning is right now. Because people have to pile into the short side. And probably we would see the low of that period through next week or through the next couple weeks into SLD. If we're gonna see any dovishness or neutrality out of the Fed, and we're gonna move to the upside, it could start happening pretty rapidly. Remember, we've discussed a bunch the pressures that are already on quote unquote long volatility positions. This is boring. Make the market do something. It's probably not going to do a lot till 2 p.m. Like, we might move back up and fill that gap, but I think we're still going to stay relatively in the same range. Oh, I am more wealthy due to the split. You have more shares, right? More people can sell covered calls, which adds to the amount of investment capital they have every week. I mean, the benefits are great. There's just, you know, no long-term. I mean, the split taught me this. It's not how the split was handled. The split showed me something which, you know, I was hoping to never actually have proof of, but uh the split showed that the shorts can just walk away. They're not entrenched, they're not stuck, they're not underwater. They just, you know, walked away for the split. And the evidence is everywhere, not only in GME fails, but in the amount of shorting that occurred during the period leading into the split. They just stepped away. They just dodged it. I mean, their positions were no chance of being blown up whatsoever. And if there were entrenched short positions that were trapped, the split would have blown those positions up. And then they just came back in August like nothing happened. What are the odds Powell walks out like Volcker, says 300 BPS, and walks off stage like a G? If he does that, he would literally earn the title Longshanks and go down in financial history. I would full port into SPXS immediately. I would sell every asset I own. Do you have a photographic memory? I don't know. It's not going to be VUP, but FTD possible price improvement on the 7th. Are you expecting a bullhawk rate increase? I'm expecting the Fed to just remain fairly neutral in their plan. I think they've already outlaid their plan going forward. I don't think any of the data has shifted enough wildly in any one direction for them to come out more hawkish or more dovish. So I think they're just going to proceed with their 0.75 increase with a planned increase of 0.5 for December. Or at least considering the range of 0.5 into December. I think if they bump and go to 1.0, they'll have to pull back on December due to dollar liquidity and treasury liquidity. That would be the only way to possibly stabilize those markets. And if they pull back rates and go to 0.5, they risk core inflation accelerating ahead of their ability to contain it with monetary policy. How does the SPX chain look between here and 3900? Lame and full of delta neutral positioning. There's not gonna be like any indication of like positional advantage right now. I mean, 3900 and 4000 or 3950 are still elevated and strong. 3835 is a strong positive point, so that's probably, you know, near our floor for today, at least to the downside, which is kind of where we're trading, right? We're trading right on top of that, you know, positive pressure. But both 3900 and 3950 are weakened today due to the delta neutral positioning to the downside. So if we fall really hard from the Fed meeting, you know, below 3800, we could start to accelerate down, but positioning is still relatively weak. Today's expiration, you know, it's negative below us and positive above us, so, you know, we're like right here. No, DRS doesn't ruin the chances of MOASS. It just needs to be leveraged against, and that's the problem, is that it presents a very easy way to not do anything, and that's not going to affect any change, right? If people leveraged options against DRS positions, we would be having a way different conversation about GME. But you know, they're taking advantage of people DRSing and buy and hold, but we, you know, as a broader community, not here, obviously we try to, but the broader community does not take advantage of it. And look how little it takes. I mean, just look at the other day, for instance. It doesn't take a lot of retail call interest to really get things moving. What's up with NVIDIA? I don't know. It's moving up. Maybe they had some FTDs today. Is there news? Don't they have earnings? No, earnings are next week. I have no idea. Maybe there was like a bunch of internalization on it. I haven't really been paying attention. I'm just not shorting it until the market's done rallying. And it's higher now, so even if I wanted to short from this price, it'll be really easy. $24K put OI at 4,000. What mean? I mean, that could be sold, it could be bought. It's not as significant as the call OI. The call OI, like the call gamma at 4,000 is even for this week is, you know, the net gamma is 509,000. It's 2.36 billion for the 11/18 expiration. Total gamma at 4,000 it's still skewed positive, but it's like 4.8 million for all expirations on SPX. Could be sold strangles. Nothing's going to happen with Revlon until after the omnibus hearings, or unless a buyer is found. They're actively seeking a buyer. Just wait. Wait or don't. I mean, you can cut your losses. It still has value. Do you think the market has already priced in the midterms? They don't really price in midterms. The market will probably like it if we get a stagnant House and Senate. DRS help options traders or swing traders? And right now it helps option sellers. What are Oxy and BTU doing? Is either getting a better range to open a position, in your opinion? BTU's kind of staying around 24, which is a little expensive. I haven't looked at Oxy this morning, but it was performing pretty well the last few days. So Oxy fell off a little bit this morning. I don't think 70 is a great price to buy Oxy, but their earnings are coming up, and their earnings will probably be very, very good. They're It's trading right at its like short-term resistance right now, at the bottom of the uptrend. So I mean, for a short-term like in and out, this isn't a terrible price, provided it holds the trend that it's on. I think Oxy has a pretty strong amount of buying at 68-ish. I know Warren Buffett's more than willing to buy it below 65. Do you have a personal CSP target for Upstart? The ones I have out expire this week. So as long as we stay above 20, I'm okay on those. If I'm going to sell them next week with earnings, I'm going to sell them at a lower strike, probably like 1750 or something. Do you mind doing some screen adjustments when convenient? What's that? You speculate on Fubo pricing around its earnings. It'll probably get shorted. There's still a significant amount of put interest to the upside on Fubo, most of which expires on the 18th. I don't think earnings are going to be so good that they're able to break that down. They could be, but it's unlikely. They already released a preliminary report if you want the numbers for their earnings or the expectations. Whoever turned me on to MMTLP, I want to say thank you. It's been quite good. I look forward to getting rug pulled before taking profit at some point soon. Accurate. Sorry, I bought another 25 Upstart Jan 100Cs. Nice. Did you take a look into VET? What did you think? I think I did, actually. Hold on. Let me see if I have the chart. This was like Vermilion Energy, right? I liked it, but then there were a bunch of announcements about the EU kind of stabilizing their LNG reserves. And so I'm gonna stick with BP like as my play. I don't think it's bad. I think it's still got room for potential, especially moving into like the later part of the winter, where those reserves are likely going to be pressured more heavily. So I might consider it then, depending on what price it's trading at that point. But right now, yeah, I'm just gonna stay in BP because it does have that broader exposure, which kind of protects me from the risk of the LNG market stabilizing. Would you take a look at Livent for me and give me your opinion about the company? I mean, I can't do too much on stream. Like, I'll take a look, but I don't know how much I can tell you. Specialty chemicals, so, like industrials, not not a very old company. I don't know how much faith would be put into their value. Financials are very decent going into a recession. Solid book value per share. Free cash flows a little weak. How much cash they get from operating? They don't make a lot of money, do they? Their growth is good. Yeah, I mean, I don't. They seem just a cursory glance. They seem fairly stable with a okay balance sheet. I don't really know a lot about what they do, obviously. I think they may see like a little bit of pullback in growth over the next couple of quarters, or at least revenues. But yeah, not terrible. Pulling in 60 million net on 218 total million total revenue. Yeah, not bad. Not bad. I mean, it's very stable. It seems like they're well run for the most part. Kind of a big float. They might be trading at like a little bit too high of a multiple. I can see that pulling back. A couple of quarters might be a cheaper entry opportunity. Clearly, the DMM wants the market at spot as close to neutral as possible for the upcoming rate announcement. Kind of bullshit. I mean, of course they do, right? The positioning's very even on both sides. Do you see Apple going bankrupt anytime soon? No, not at all. They have tons of cash. So fucking much cash. Was there such a thing as any actions that would be taken after 90 trading days of the split? I heard it somewhere else, but I don't know what it really represents. I mean, insiders, I believe, are allowed to sell shares after that period. I don't think anything else significant is going to happen. There's some ETFs that haven't yet reported an updated GME holding from the split, which they should have. But also all the 13Fs aren't filed, so we'll have to wait and see. There could be obligations due to the ETFs that have not been realized yet, but it's questionable. They mine lithium. Okay, I mean that's a pretty good business. I mean, for a mining company, I do like their balance sheet. It doesn't look super criminal, although I think they may have been a bit fast and loose with their dilutions. Mining companies tend to be, because they need rapid capitalization to start projects. Did you enter your position for the Fed meeting yet? No. That's on Upstart being on the same channel during the entire bear market rally. Could be. I mean, it's still effective. It's not in as many ETFs as something like GME, so active fund pressure on Upstart is a little weaker. But if the market rallies hard enough, there's still going to be some pressure. And if you start putting active fund pressure against the amount of FTDs they have due, it starts to get a little spicier. So maybe not. Gherk is a snitch. Who did I tell on? Any insight on Fubo going into earnings and the week after? No, not really. I mean, it's probably going to stay around the same price it's at. Earnings might give it a little bump, but it'll probably get slammed right back down by the massive amount of put interest to the upside, which I'd imagine will only increase into earnings as selling naked calls becomes more and more profitable. Are you favoring the upside for the Fed meeting straddle? No. Not particularly. I have upside positions on SPX, but that's not really for the straddle. It's WM waste management. Similar price action as CAT. Somewhat. I mean, it's in Dow. I haven't looked at it in a long time. It's, you know, channel locked, kind of consistent growth, very slow valuation cycles. Good company, not a bad investment. They have an okay yield, if I remember correctly. But not similar to CAT. Not by any means. That's on SQQQ calls versus SPY puts for the upcoming market downturn. Because most tech probably still going to get hit harder than the defensive part of the SPY. You're not wrong. Yeah, NASDAQ will probably take, oh, especially the NASDAQ 100 will probably take the biggest hits over the coming couple of quarters. But don't forget, it also has protection, right? And, you know, Apple and Amazon and Google that generally, even if they underperform, aren't going to underperform that much because they're monopolies in their own rights. What do you think about November 18, $5 calls on Fubo? I think that's a terrible fucking idea. How close to the money do you play your straddles? I mean, straddle is defined by its proximity to the money. A straddle is an at the money position. Analysts giving ENVX a price target in the mid 30s. Okay. It looks like they had okay earnings and shit revenue and are experiencing a really, really big sell-off. I don't like Boyle. I pulled back my exposure to it. European LNG reserves are too high right now. If I see them start to fall off, I'll consider another position in Boyle, but I'm staying away from it for now. I could be wrong, but I think it'll decline over the next couple months. Selling CCs is the best. Instead of diamond handing my calls to nothing, now when that happens, I make money. Amazing. It's usually pretty decent. Were you expecting this GME action today? You mean a lot of fucking nothing? Yeah. Just saying hey. I hope your FOMC position prints. Praise be to JPOW and his sumptuous whispers. Thank you so much, Evans. Thanks for stopping by, dude. I'll see you around. Can you let me know when you enter your Fed volatility straddle so I can blindly follow without price targets or conditional stops? Thanks. No, I'm gonna avoid that. FYI, stainless steel prices will probably be dropping into end of year. Ooh. Short X. Any reason to think Upstart shorts will just walk away like they did with GME? No. I mean, they have a lot of obligations to cover before they can do that. They had to cover obligations on GME before they could walk away, too. But it wasn't very hard for them, right? So since earlier you mentioned that you don't have any puts yet, if the Fed meeting comes out as anything too hawkish, then would you immediately enter long-term put side positions? Probably. Also, the volatility will come down. Like, buying put positions right now is a little pricey. Morning, sir. My search last night found nothing. I mean, I think the thing you're looking for might not exist. Like, being able to link it to your brokerage account with no management. Like you still have to input everything into those. I tried to find something too, and I really couldn't find much. There's a few that'll like track your dividends and shit, but not very many that track options positioning. You're just gonna have to break out Excel like an employee would. Or hire someone to do it. Like an accountant or something. You're the voice of reason I never wanted. I'm sorry. Any volatile penny stocks you can think of for day trading? Ew. As FOMC is bullish, isn't it possible GME has some mild ups before end of day? Sure, yeah, I could. Best books to become great at TA. I'm not sure how desirable of a skill being great at TA is, but TA of the technical analysis of the financial markets is probably all you need. Most of the books on technical analysis are bullshit. They were written so the writers could make money because they couldn't make money with technical analysis. So if DRS is beneficial to the hedge funds short volatility, shouldn't we DRS more? And I hope people do. I hope they continue to DRS. Imposter. It's okay. I see it. What's going on here? Why are you guys pretending to be each other? Or why is the imposter pretending to be you? Yeah, I don't know what to do about it. I mean, they're clearly fucking with you, and they've gotten all up inside your head. SPX gonna pump to 3,900 after the FOMC meeting just because. Well, it's not just because. There's a lot of macro factors that encourage more upside than they do the downside. Cover calls are the greatest invention mankind has ever dreamed up. One could say options are the greatest invention that mankind has ever dreamed up. But in reality, they're useless. You're essentially just betting on the directionality of assets, and options are the insurance. You're playing insurance. You're selling people insurance, or you're buying insurance on the fake potential value of your investments. Ugh. I'm not gonna think about that too much. Carl, stop timing everyone out. Grick, I'm the real person. The person who said imposter is the imposter. Grick, make them stop. I'm the real one. ridiculous. You know, if one of you changes your names, whoever the non-imposter is changes their name, the other person won't know what you changed your name to, and they won't be able to copy you again. You can wait till they disappear because they get bored with the meme. Is the ascending wedge on the daily on SPX garbage or consolidation that is likely to break out? It's just we're just channel locked in the middle of a bunch of delta neutral positioning, as literally everything waits on JPow's tiny words. I can't time the imposter out because I think you're both the imposter. I don't know who's real. Did you ever imagine you'd be an insurance salesman for the majority of your life and love it? No. What's the next like BBBY opportunity? Is Upstart it? I don't know. I don't know if Upstart's gonna go as nuts. The out of the money call interest on Upstart is not nearly as high as like what BBBY was. But it's also way less liquid, so it can be more fun. Also, no rug pull from Ryan Cohen. How long do you typically like to buy cap positions? Usually like 45 to 90 DTE. Sometimes 30, but rarely. Sometimes 0, also rarely. Hey, buddy, I was going to enter the book of my SPX position after the FOMC drops the number and the price gets pulled down to the losing side so options can close out. Yeah, but volatility is going to spike, right? So, I mean, you're just going to pay more. It doesn't always work like that. Sometimes it just goes, it can just go up. It doesn't have to go back down. Not every straddle wins on both sides. Yeah, that's what I was hearing too. Is that the kind of mild winter so far is a very good sign for European natural gas reserves. So yeah, I'm trying to be a little more careful with my exposure to that. And I like BP anyway. I think they're a decent company. I don't really want too much like petroleum exposure. I already have Halliburton, Oxy, and now BP. So I'm getting like a little over leveraged in, you know, industry and sector I'm not really a huge fan of. Apple chart's still good to you? I'm confused, but I think I found a lower channel on the weekly, and it looks like Apple is below that. Hmm. Nice. I don't care about your technical analysis, Stefan. Either the market rallies or it doesn't. If the market doesn't rally, don't stay in Apple. Definitely Carl. Hi, I'm Carl. I was cast from my Viking tribe because of my low T and uncanny ability to crunch numbers like a nerd. So I time them all out and shit in the stew. I also go by Fatty McFatface, and I've got more. And if you've got more T than me, I'll time you out too. That's definitely not a Carl message. What DD were you referencing earlier? I want to add it to my list. Which one? When I was talking about asymmetric tails? That's the River Roads Dry DD. God, I thought you printed it out, laminated it, and framed it, Carl. How could you do this to me? You don't even have it memorized? SPY ascending wedge. I was talking about the daily chart, not the 1 minute. I know. It doesn't mean anything. Everything hinges on the Fed decision. Put the TA down for the next 4 hours. 3 hours. Did you see Putin is letting grain out of the Ukraine? Yes. I'd rather pay more to have 75% of my bet on the winning side. Fair enough. What if it just keeps going down? Like, what if you go to buy the bottom and then it just drops off a cliff? I made out with a girl who had a faint blonde mustache that I couldn't see, but I felt. Am I gay now? No, I don't think so. Unless that was the thing you focused on the most, and that's what got you going. If you were like, man, I really like the feel of a mustache when I'm kissing, then maybe. But only you would know the answer to that. Yeah, I know. They're waiting to unload, but they don't have anywhere to put it. World Cup in 18 days. Fubo. Cool. I mean, those numbers won't be reported till the next earnings, but could be good for them. Can you explain why you think the most likely movement for the announcement will be positive? Last time there were doom and gloom, and the inflation numbers aren't much better. They're a little bit better. And also, this rate hike is already expected. So 0.75 with a continued neutral stance is just going to feed into the leverage long side positioning that's already on the SPX. Which, even with all the negative delta, like all the negative positioning that's come in since yesterday, is still stronger than the downside positioning. So the market will just continue to rally up because that's the direction that it's cheapest to get leverage on. What if JPL calls you to ask if he should do 75 or 100? It depends. If he does 100 and removes December, like if they do 100 and pivot, I'm not sure that that's going to be super bearish. The market already expects 1.25 for the rest of this year, so what's on Google these prices? It's okay. It can be cheaper if you wait. Buying an at the money call on both the SPX and SPXL for the FOMC announcement would be smart, or they not move enough to make it profitable? They might not move enough to make it profitable. It probably will be. But IV is going to be really high, and you're going to have to deal with IV crush. What are your thoughts on going long energy over the next few months? I feel like a significant amount of it's been missed out on. Maybe long utilities would be better. Ghostly Spirit of Luke Spears. Hey, I sent you the chart. Why? Okay. Ugh. Your bottom trend lines I don't like, but are you using linear charts? Ooh, what's this? Oh, this is beautiful. I like it. Yeah, I too wish that the FOMC minutes were scheduled earlier. They just aren't. Hey Gurk, love you. Thanks, Lugs. Upstart to 70, Upstart to 25 on a market rally. Yeah, it'll probably push back up if the market rallies. They'll internalize it more too. How has JPM not lost credibility, calling for a 10% move for a 0.5 hike? I don't think they're wrong. I think the market, not 10%, but I think the market can move up like 5 to 6 if we get 0.5, at least with the current positioning. But it can move up another 4% over the next few weeks into SLD. I think after SLD, the market will probably pivot to the downside though. Did you look at the secret penis I DM'd you? You didn't. You forgot to send it. Wouldn't we not do that though? Because that happened last time, walk-in, and then the composite man would be very confused. The composite man doesn't like to repeat himself. I'm sorry, I'll stop. But you've got to stop leaning on Wyckoff so hard. He had some very good ideas, but they're not the end all be all of market participation psychology. So anything less than 125 BPS would be better than projections, but not necessarily better than expected if the market is priced in 75. Futures have priced in a rate increase to like 4.56 by April. So the market, as far as the market's concerned, it's priced in heavier increases than we may see. If we're going to move into the end of the year at 125 BPS, more than 125 BPS, that would be very bearish. But, you know, they can offset a lot of the effect of that by talking about, you know, pivoting into like quarter one, and getting the hikes out of the way now so they have more time to have an effect. Their healthiest option would probably be to do like 1.25 today and then just no increases until they get a couple months of data. Gonna straddle JPOW today? Yeah. Can you refer to us as your gherkinites? I'd prefer not to. Gherk's ice cream sandwich. Stefan, answer me. I looked at your chart and I asked you if you're using linear charts. No, I don't use fucking fibs. They're fake. If FOMC comes in as expected, do you think AMD could hit 70 before SLD? Or is that too high of a strike to target? I don't know. Could. It's a bit excessive, but their earnings were not the worst. I mean, obviously their forward guidance has been reduced. Don't forget that I wouldn't target those ranges for too long though, because they are also going to get hit with those Chinese sanctions. It's going to really hurt their bottom line. Sorry if you already answered this question, but was the whole $30 GME price and it going parabolic, was that a media hedge fund hoax? Seems like it. I mean, it did go parabolic all the way up to 10% above Gamma Max, and then it dropped like a rock. Thanks for looking at my chart. I think I have low self-esteem, TA, today. I think it's because I woke up at 4:40 a.m. and couldn't go back to sleep. You didn't answer my question about using linear charts. Don't use linear charts to do your TA. Bad. Better on Apple, but just generally not very good. The market's way too volatile to be using those right now. I'm in a pretty good mood today. Fake ass ha. CME FedWatch tool has more than 125 BPS to end year at 42%. Compared to 35% last week. Yesterday was 49%. Cool. Today's higher though, because the market dropped again. What IV range do you typically see on CAT as it moves through the channel lock? It varies. Like intraday volatility on CAT can actually get pretty high. But you know, usually IV30 stays relatively stable. I think like the IV30 on Caterpillar kind of peaks in like the 40% range. And generally CAT's highest IV is at its bottoms, and as it rises IV falls off. So it's usually more volatile to the downside than it is to the upside. But yeah, anywhere from like low to mid 20s up to like 45-ish. What is SLD and when exactly does it happen? supplemental liquidity deposits for FINRA margin requirements. It begins on the Wednesday before the monthly options expiration and ends at opening bell the following Monday. I didn't ask that. Stop it. I know you're the fake one. Reveal yourself, fake SH. OI and SPX is everyone's straddling, pretty much. Log charts make diagonal lines funky. I know. That's what you want. Log charts are better. Linear charts are bad. The accuracy of support and resistance lines is significantly, dramatically increased by using logarithmic charts. How do you think Ivy will go? How high do you think Ivy will go during the FOMC minutes? I don't know. I mean, it's not gonna go like crazy or anything. It'll like on SPX and stuff, maybe it'll bump like 10% or one way or the other. Which way do you think the market will go with the Fed hiking rates again? And the Fed's been talking about their intention to hike rates since September pretty much all the time. Like, I think the market's already expecting them to hike rates. SPX moves up faster than theta decay on 1DT SPX options before FOMC. My plan is to wait till right before the meeting to buy in. I don't see much reason to buy early. Yeah, that's fair. You don't have to be harassed here. This is personal. Stop it. I know which one of you is real. Today when I got to work, I saw an open iPhone box. I brought it to the management and they said to put it back because they were trying to get people to steal. And hashtag entrapment. P.S. I won't be around much until after Christmas. Huh. Interesting. Yeah, that is probably entrapment. I don't know how you prove that someone's trying to steal if they're taking an empty iPhone box. Maybe they're trying to catch like holiday hires and reduce loss. I don't know. Are you trying to say that the physical beauty of the chart is not relevant? Yes. I haven't entered the straddle yet. Can you explain how you see what is priced in for rate hikes? Maybe clip it. CME has a indicator. You can go look it up. ETF FTDs begin tomorrow for GME, but peak on Monday. Is there a chance that they spike hard tomorrow or Friday rather than Monday? Any reason for them to clear the fails early? No, they're cash settled. That's why they're so predictable. Yeah, so no reason for them to clear early, and I don't think tomorrow and Friday have a sufficient number of FTDs to generate any significant price action. Henceforth today I shall use log charts. Excellent. Everyone, including me, is asking different versions of the same question. I know. How do I switch to log charts on WeBull? You go to chart settings, and then on axis, you choose logarithmic. With Russia resuming the grain export deal, should I panic and sell? Like, Putin gave his word, so no going back on that. Panic and sell what? Wheat? I don't know. Should I? Probably not. I'm still up on my wheat position. Or at least my current one. I reported the imposter for harassment. Don't worry, I got your back. Are you related to Hans Moke Nyman? No. Who would want to steal an empty box? It's a good question. To fill the airspace of the morning lull, can you explain retail investors trading options on margin as you know it again? What? What do you mean explain retail investors trading options on margin? Do you not understand how to use your margin account? Your broker should have information on best use and their own rules for margin. Day after day you show up, and I'm thankful for your new bullshit style. It's refreshing, and the edutainment is great. Thanks, Dave's not here, man. I appreciate it, dude. Yeah, but by making the charts sexually attractive to yourself, Stefan, you increase the risk of, bias. You don't want your charts to be too pretty because you have to look at them objectively. And the way you have your charts set up, it just looks like Beat Saber. Check those DMs. You got more stuff? Oh, that's so much deeper, bro. Have you showed these to JFresh yet? Is he aware? Does he know that we're developing the God algo behind his back? A user put their to clarify there was an iPhone in the box, but the box was open ajar to attempt people to steal it. That's super fucking shady. You should sue them. Then you could retire. Sue them for attempting to entrap you. It's illegal. Entrapment is illegal. Depending on what state you're in. Is now a good time to average down on Docu? Is there much more downside? It might run with OPEX again. We'll see. It's been picking up like little bits and pieces of OPEX cycles here and there. So it could be kind of fun. What do you think of TSLAQ? Is Tesla really that fraudulent? What do you mean fraudulent? It's just a leveraged swap based ETF. It doesn't affect the price of the underlying at all. Before the stream, did you still sit in front of the screen all day? Or when trading flat, would you get away from time to time? Oh, no, most days. So before streaming, most days I'd wake up at like, I don't know, probably around the same time I do now, like 7:30 or, well, 6 or 7:30. I would start kind of doing my research for the day, and then I would usually trade until most days until about 10:30. Some days, if I had like positions that remained open, I would kind of get stuck in front of my computer all day. But yeah, that was about it. And once I was done at like 10:30, 10:45, I'd just fuck off for the rest of the day. Then at night, I would do some more research for the next morning and so on. He didn't attempt to steal it. He brought it to management. It depends on the state. Some states it's perfectly legal. Honest question, if a CC expiring Friday is below the current price and the price drops below the strike, does that contract then see a drastic drop in value due to the decreased intrinsic value? Yes. So in the money CC drops to out of the money, then yes. Intrinsic value begins to fall off. If a user followed the directions and redeployed it, are they complicit then? Ooh. Good point. Just put a post-it note on the box that says, "Don't steal me." You trade for an hour? Yeah, roughly. Sometimes I would enter positions in pre-market. I'll head to AA. This is not the same as a meeting. Be back at 1 p.m. All right, man. See you in a bit. This is before the GME stream when you used to day trade. Yeah. Pickle Cat, welcome to Dillionaire. Thank you so much. Hit me up on the Discord and I'll get you added to the country club after the stream. SoFi just getting buried. Well, it is a piece of shit. $19 CSP on Upstart for 11.18. Gonna be safe. Not really wanting shares, and I'm up 30%. Kind of want all the premium though to average down my calls. 11.18 is risky. How do you use CV VWAP for trading? Day trade or swing trade? I don't really. I just use it to see how much arbitrage happened on GME overnight. Good morning, buckled up, Jen. To whom it may concern, ejaculation isn't a profanity. Tell YouTube, don't tell me. With the Tesla research that especially Ed Niedermeyer is publishing in reference to TSLAQ. Oh, I have no idea what you're talking about then. I'm so pissed. I sold off my SoFi puts at 70% gains. Then the price dropped 5% more. Whatever, man. You made money. Who cares? Snowing MOASS confirmed. GME at risk of pushing through 30 if the Fed comes out full bull? Or is that line looking safe until OPEX? It looks pretty strong right now. With ETF FTDs coming up, where do you plan to cut those GME $27 calls? They expire this Friday. I've made some money on them now, which is neat. What stocks did you used to trade? Mostly SPY, SP 500 stocks, or big gappers, big gain loss overnight, or stocks that you did research on the night before and in pre-market. Stocks that I did research on the night before and in pre-market. Sometimes, you know, I had scanners, but I've never liked scanners very much. Yeah, mostly S&P 500 and S&P 500 stocks, I would say. Not gappers. I've never believed in that. That's kind of bullshit. I used to short a lot of Wall Street Bets shit. I would wait till I started to see gain porn and then just buy puts. I'm getting slammed because of the plant in China. Any point in getting puts, given that it'll probably just rip with FOMC. I don't think it's getting slammed because of the rumors out of China from a trusted source with knowledge of the situation. It's just getting slammed because the market's a little red today. Good entry Apple opportunity on Apple if it continues. Yeah, I think so. I might buy some more Apple calls. Do you have any Apple calls? Yeah, I have some November and December calls on Apple. Didn't Upstart get removed from Reg Show, which was the thesis? So the thesis wasn't that it would continue to stay on Reg Show. The thesis was that it was very good that it had been on Reg Show for so long. It was ideal if it continued to stay on Reg Show. But the removal from Reg Show does not mean it won't go back on Reg Show, right? If it runs and goes back on Reg Show, that's extremely bullish. Getting it off Reg Show was not, I don't think, particularly easy for them. And all of the synthetic liquidity used while it was on Reg Show to continue shorting will have to be covered. And in the event of that covering, it will likely go back on Reg Show. And if that happens, full bull. Getting it off Reg Show, yeah, there's at least a timer on it. Getting it off of Reg Show is, given the amount of FTDs on it, is actually kind of bullish. Because it means they probably needed to dodge locates. This happened with GME in 2020. It went on Reg Show. They finally got it off Reg Show like a month later, but they'd built up so many synthetic obligations that, you know, they had to cover those, and then they covered them, and it went right back on Reg Show again. Downward pressure on Upstart, good for a potential run. I mean, yeah, we want to see them, you know, shorting it, ideally. Also, puts are really overpriced on Upstart, so calls are basically free, which is dope. Most of my calls on Upstart have just been paid for with CSPs, so I'm getting like a lot of upside exposure for little to no money. at certain points, like when we're really close to 20, like we are now, you can almost get 2-to-1 leverage with your short put leg on the synthetic long expiring, like the risk expiring much sooner, right? So you can sell like a 7 or 14 DTE CSP, right, and get credit sufficient to buy like 2 long calls, right? So you're getting like 1 to 2 leverage, and then the long calls could be dated for like Jan. So your risk is off the table after 7 or 14 days, but you keep a long position that has either a very low net debit or is net credit. Why are synthetic obligations not illegal? Because for the market to continue to function as a liquid environment, or for the market to achieve efficiency, it needs liquidity. That's a better way of putting it. How did you originally come across the GME play in 2020? The first time I found out anything, it was like a comment from DFV, and someone was like giving him shit. I think it was like some guy who he posted like some meme about GME, and then like I think DFE commented on it, and a bunch of people were just like giving him shit, and I was like, what's this like thesis, right? Like, so I went and like checked his user profile and like kind of saw his stream and like some of his videos and what he'd written up on Wall Street Bets and some of his like comment threads, and I was I thought his expectations seemed very reasonable, and it was like I had some money that I wanted to throw at something a little longer term, and so I was like, yeah, I'll put some money into this because it looks decent for like a $10-15 move to the upside. And I thought GME was really undervalued at the time, and then it moved a lot more than $10 or $15 to the upside. Then in February, I sold off all my options in January. At some of them far too early, unfortunately, but some near the top. I made a lot of money off of it, and then in Feb, I started buying in again for like a dead cat bounce, and when DFE doubled down, I just went almost full port. I didn't think it would run back up to 350, to be honest, but I did think it was going to run up again. Positioning on the options strong, and then his, the sentiment was so strong that I figured it would like at least 2x, and it just kept going. Well, the cool thing about DFE, if you ever paid attention to Wall Street Bets in the past, is it was mostly just YOLOs on stupid shit, or like, I heard some news, so I'm going to buy this. And DFE had like a really sound thesis on GME. It seemed good. It was rare to see that on Wall Street Bets. It still is. So yeah, seemed good. It was. I mean, it's turned into so much more than I ever could have imagined back then, but I actually held my shares in Feb because they were still up. I didn't sell any of my shares. And then most of the contracts that I bought going into the run at the end of February, I ended up exercising over the rest of the year. I did sell covered calls on that run. It was the only time last year I sold covered calls on GME. And I thought the price was becoming a bit unstable as we approached 350. And I actually tried to warn like Wall Street Bets and I think I got auto modded, and then I like super chatted Matt Kors because there were like 12,000 people in there, and I was like, hey man, I think this is gonna flash crash, and one of his moderators banned me from his chat. And I was like, so I sold some covered calls and then spent the next month panicking that they were going to get assigned because it looked like it was going to rip again. And then I never sold covered calls again on GME last year. But I made like $50 a share off the covered calls that I sold at the top. I got in at 300 and held to 220. SS entrapment. iPhone 14 Pro open box. Where do you feel my stomach turn buying Upstart Jan 35s? Looks at Rev Jan 35s. Fair enough. I mean, if nothing happens on Upstart through November, I'm going to just cut my position. But the advantage to Upstart and the advantage since the beginning to Upstart has been that, CSPs pay for your call position. So exposure is very, very cheap or almost free. It could be, if you don't take a lot of leverage, it can be free. Netflix 275 PT is chef's kiss. Echelon call on that one. Those who held short through the temporary ups on Monday are being rewarded. I actually cut my position on it. I kind of regret it, but yeah, the rest of that buyer pullback ultimately was realized. Our 6-month anniversary. I love you, Dad. I just want to let you know that you're the man, and I appreciate all you've taught us. Regards. Who somehow still lose money. I now lose less and hope one day to not be poor. Awesome, Jeff. I'm glad to hear it, man. Was that moderator Godpill? I don't think so. Well, I knew Matt Kors was an idiot, but I also knew that everyone watching was in GME, right? For the most part, because that was like way before anyone gave a fuck about AMC. So I figured it would be helpful for people to know, or at least like hang on a flash crash, right? Because at the time I was watching like options flow, which is mostly useless, but so many in the money puts were coming in, like thousands of them. And I was like, man, that looks really fucking bad. And they were like just slamming the fucking bid on them, or the ask on them. And like the price started to stabilize and volume was spiking dramatically, which is all indicative of like a turnaround from a technical point. And Matt Kors is sitting there going like, woo, MOASS, we're going to 1,000 boys. And like, yeah. So, and I think after that, I decided to start this spite stream. Where I would, over the course of several years, reveal that Matt Kors is in fact a fucking idiot and probably lost people millions and millions of dollars. Yeah, I've seen Jeff Amazon's post about GME on Wall Street Bets, or the original one. So do orders on SPX have to be actively hedged in real time by the market maker? They usually are. You started after Warden. Yeah. Not after Warden, kind of the same time. I started writing a daily DD when Warden quit writing the daily DD. Because I was like, at least Warden was trying to analyze the stock instead of just screaming crime and, targeting millions of dollars a share. And I thought that analysis taken from the community would cause the community to become even more conspiratorial. So I kind of just decided to start doing it, and people wanted me to keep doing it. Thanks, Shot My Life Away. Hard to imagine where we all might be if you'd ignored DFV. I might still have a family and a job. No, you wouldn't. They didn't like you anyway. SPX is literally hovering at the midpoint of my strangle. Am I the market? When Pink Cat's on Acid OnlyFans stream? Ew. You can do better, bro. Gen 24 127.50 is the new safer IV play for runs on GME. They have a little more Vega. You mean like it is now that they've driven all the DD writers away? Yeah. Holding November 18th spy calls and puts. When would you close out the winning leg? Would you wait till next week or sooner? I would close out the losing leg immediately, and then I would, set stops and follow price action on the winning side. You did us the service of saving the deck from the clutches of Matt Kors. Someone had to. The things that were going on there were just perverted. Of all the financial streams out there, I'm thankful that I came here from Warden's end to your beginning. It's been worth every minute, silently lurking and learning. Thank you so much. About to get some. I love how SPX on FOMC days trends slightly down because retail can't handle sideways and sells throughout the day. Yeah. Yeah, retail investors really don't like sideways. It makes them very nervous. How many GameStop hoodies have you got for winter? 0? I don't want to be a fucking walking billboard for GameStop. How soon can you identify the winning side of a straddle when things get super volatile? You can't, but that's why you buy a straddle. I mean, you try to trade it as efficiently as you can. If you see, generally speaking, I don't buy long dated straddles or try to like follow the trend after the straddle. on the SPX. Like if I'm straddling in a one-time event like this, I'm usually gonna buy like 1 or 2 DTE, and then I'm gonna sell when they're profitable. You know, so if I see the price collapse, but the collapse starts weakening and looks like it's gonna rebound, I'll cut my put side, and then the opposite for the call side. You know, you just trade the volatility, but you have to be a really good trader to make a lot of money off of it. It's hard. Like, it's very, very hard. I don't recommend it for beginners. For a beginner, you're probably better off just snatching profits when they're available and then not worrying about the rest of it. There was one Fed meeting, I think it was like 3 or 4 months ago, where I really killed it, but the rest of them this year have been like, the best ones have been like 100% on either side, and then the straddle's closed. One of them I like hit the peak, then I hit the bottom, then I bought calls and it rallied into the end of the day, so I made a lot of money off that one. I have a theory. It could be bunnies based on past patterns. I'm thinking we get a run starting 11:15, peaking 11:24, then flat till 12:15. Early OPEX runs like end 2020. F-man again after. Yeah, I could see that. I think we'd peak on the 22nd though. That would be the only part where I disagree. And I don't think flat. I think down hard into end of year. Because they'll want to close those positions this year, right? Or at least set up the tax burden into next year. I think that's a big reason we went down so hard following November last year as well. The whole market, as a matter of fact. I came from Chaseway, but he's too intense for my taste now. He's a bit of a, he's got a volatile personality. He's a good guy. We have very different analysis approaches. I think, I don't know. I guess I don't really have an opinion. There's always like some sort of drama there. It's just not really my style. Wall Street Bets is pretty dead right now. Everyone was FOMOing GME the past week, and now it's boring. Well, yeah, because they all lost their money on Monday. What's the actual benefit to buying weeklies? You're not going to hold them for very long. So you're using them to capture near-term price action, right? How many instruments call CC puts? I have to handle well before thinking to start day trading. My cholesterol levels are rising faster than my portfolio value. I mean, you should understand how to effectively use options. You should probably see some consistency in your results before you consider day trading as a career. I will say that most people who attempt to become day traders fail at it. It's very, very difficult. Requires a great deal of focus and robs you of almost all of your mental energy. So consider that. There's a lot of other ways to make money in the market without necessarily being a day trader. I need to average down Upstart, December, and Jan calls. I should have sold on the last bump. Is sub 21 a good entry? Or wait until after earnings? I'd probably wait till after earnings. I'll probably wait till after earnings to average anything down. Her Cosmic Lightning Warrior stream was the best. Oh god. When trade spotting draws a TA wedge, he uses 3 lines. Why? Some people do that. I've never understood it because the candles on the backside already create the line. But yeah, some people do that. Monthly reminder that this is the coolest place on the internet. Thanks, Brian. Any thoughts on DVN? Did well on earnings this morning, but slipped due to cutting quarterly dividend to 135. Price is currently 72.41, so the dividend isn't bad. I'll take a look at it, Space Banana. Yeah, the yield's okay. I'm guessing they're expecting a contraction in their margins, though, which would be why they cut back the dividend. So I would look for a lower price target instead of buying here so near the peak. Maybe sub $68, and I would probably even target like 62 or 56. Honestly, like with that announcement, puts might be better in the short term. Day trading requires more money, more time, more stress than swing trading. Swing trading seems to be more profitable. I know a lot more successful swing traders than day traders. There's very, very few successful day traders. Yeah, swing trading is definitely more profitable. More importantly, I like swing trading. You need more capital to swing trade effectively. But I like swing trading better because you're able to position with less risk, and you're able to manage your risk over a longer period of time. How do you get better at directionality? You don't, right? You reduce risk. That's how you get better at it. Like, no one can say with 100% certainty that when a stock falls to resistance, it's going to bounce, right? But there are indications of it bouncing, like the trend starts to pick up off of the drop, breaks out, falls, and holds a higher trend, right? Like this is indicative of, like a breakout, right? But most people want to, like, a lot of day traders will want to enter here, and I don't like doing that. When I'm day trading, I generally wait for a confirmation of trend, which reduces profits. Right, in the like, it reduces potential profits. Obviously, like, if you bought here, sold here, bought here, sold here, bought here, sold here, right? But like, I'd rather confirm like this bounce and have confidence in like the upside move. But everyone kind of handles that differently. But what's really important in all of this is not where you buy in or how you manage it. What's important is ensuring that you don't lose money below here, right? That's what makes good day traders, is not people who focus on how much they can make, but how little they can lose. What does it amount you to be comfortable to start swing trading? If you're good at managing positions with options, you could start with as little as like 35 or 50 grand. Up to 25, you need to scalp, or there's only two routes really, right? Like, from like $0 to $25,000, the most effective routes are scalping, which is the fastest. This can get you scalping with really tight risk, can get you from, no, let's not say 0. Let's say like 5 to 25k. Scalping with very very limited risk. You can probably do this in about 90 days. Or you can use like theta strategies, like CSPs, naked calls, buy rights, and you could probably do it in about 180 days. It's much easier to reduce risk on this strategy than it is on this one. But remember, growth is like exponential, right? So 5 to 10 takes a while, but 10 to 20 is pretty fast, and then 20 to 25 is quicker, and then 25 to 30, 40, 50, 60. It starts getting a lot faster as time goes on. Scalping is better in a bull market. You're not wrong. That's because upside trends have they have more, stronger support in a bull market. I don't know what any of those words mean. Should I remove hashtag daytrader from my LinkedIn profile? Yes, but leave it on Tinder. You can make over a 10-year period, right? The momentum gained from a small port and risk averse like theta strategies, and the amount of money gained from like scalping, the risk averse strategy will almost always win out. Because with scalping you're gonna have big losses, and with the theta strategies you just kind of have incremental gains, right? Scalping same like day trading? No, scalping's buying into momentum. Day trading is just any trading that occurs on an intraday basis and is closed before the end of the day, right? Scalping specifically is buying into momentum trends. So momentum is up, stocks moving up really hard, and you're trying to buy in here and sell here. Buy, sell, right? Like you're confirming the trend and then you're buying into the momentum and trying to exit early before larger positions move out. It's chasing with really tight risk. Generally, when you scalp, your risk is set at your buy-in. So you're buying in with a stop set at your buy-in price. Then if it moves against you, you immediately sell, right? If it moves up, then you stay in it and keep moving your stop up until you get stopped out. There's a lot of different strategies to day trading. That's one of them. You guys have seen me like I'll start buying like a dip and then ride it back up. Or the other way, I'll start buying the top. I like this one because you're going to confirm the trend and fade into your position before the expected move occurs. If it starts to move against you, you can start to like back out of it. So you could go like buy, and then, sell, And then if it bounces back, you can buy back again. Buy, and then up, and sell. Our Upstart Gen 60 is a theta averse strategy. I mean, they're very directional. They're mostly a volatility play. The Fed announcements at 2 p.m. today, not 1 p.m. Two p.m. Eastern. If I'm looking to buy 10 SPY calls, it would be better to buy one SPX instead. Usually, yeah. Let's see if there's any arbitrage there, though. Sometimes the 10 SPX calls could be better. You have less leverage risk with the one SPX call, though. Thoughts on combining scalping and theta plays to grow an account as opposed to concentrating on only one? You could, yeah. But the problem is when you take a hit on the risk side with scalping, you hurt the potential growth of your theta strategies, right? Because you're double dipping into the same pool of money. Yeah, I don't particularly like Tupperware. It looked interesting, but eh. What economic calendar, event calendar do you use? Which is the one that I like? It's called I think the name of the website's like Trading Economics or something. It's pretty succinct. I don't like a lot of the other ones, how they're displayed. Distillate production's up. That's interesting. Gasoline production's down. Oil stock, heating oil down. Ooh. ADP employment change. More people employed. Wow, that really beat expectations. That's kind of expected moving into the holiday season, though. Mortgage rates at 7.6. So mortgage rates are down a tiny bit. Vehicle sales are up. Stupid. Thoughts on bearable traders or warrior trading to learn how to day trade? Those guys are fucking shills. I'll tell you how to learn how to day trade. Buy some books. Buy technical analysis of the financial markets. Learn about options. Learn how to evaluate a company to see if it's worth trading in the first place. And then paper trade until you learn to make money. Anybody who's charging you to learn how to trade is full of shit. And there are no repeatable effective strategies. You have to learn all of the strategies and know when to utilize them. Warrior trading, as far as I can tell, streams to his audience during the pre-market and then scalps the momentum they build with the delay on his stream. Yeah, I mean, there's some theta lost. You're still feeling this FOMC meeting could cause a run. Apple and other blue chips are being hammered hard. I know, I see them. Yeah, I do. SPY's only down 50 BPS today. No answers in the Bermuda Triangle. I guess you don't want to talk about it. Not particularly. Or you're trading sim like Krav Maga. Hey Pickleman, finally make a dent in lowering my cost basis. Signed on 28 CCs last week. Now making money on CSPs. I don't want to miss an incoming rip. Still expecting VUPs next week. Not VUPs. I expect we'll move up for ETF FTDs on the 7th. That seems like the most likely day to see some effect from them. We may see it a little early. I doubt it, but I guess Friday has some potential. But yeah, next week. Yeah, the book's by John Murphy. I think GME will also run or just stay choppy. I mean, it'll put pressure on it. I don't know if that pressure will realize any results. Will there be more insane stop-loss hunting both up and down right after the minute release today? Always. It's not just stop-loss hunting, right? It's repositioning. Did I look? What, at ACIW? No? Didn't they have their earnings today? Were they shit, like I told you they would be? Oh, fine, I'll go look at it. Yes. Oof. Fuck. Rough revenue miss. What do you think about Marathon Petroleum for exposure to the worsening diesel shortage? I don't know. It looks like distillates are up. Like distillate production is up. Significantly above expectations. 139,000 barrels against, you know, for negative 45,000 barrels last month. Production, yeah. So that's kind of a good sign for diesel. Looks like production's almost up across the board except gasoline. Gasoline's down a little bit. Interesting SEC meeting just ended regarding liquidity risk and open-ended funds, XRT, on standardization of redemptions and qualifications of liquid assets. No more meme ETF with no leg to stand. Interesting. Can you send me the documentation, turd? Yeah, liquidity on GME is really dry, so they need at some point to run the stock pretty hard to get the liquidity back. They got a little bit of liquidity on Monday, but it's not going to be probably enough to sustain them through November OPEC. So they'll get a little bit more liquidity on GME and its underlying ETFs during the ETF FTD period. And then if they use that to short as well, they'll be just about out of liquidity again by the time November OPEX rolls around. Yeah, there's a problem. Well, the biggest problem with diesel is that, the Russian exports are cut off. But production's up over last month, so I don't know what to say. I mean, it's not up a lot, but it's up. If you're wheeling, what's most profitable? To never get assigned on CSPs versus never getting assigned on CCs versus getting assigned and alternating between CSPs and CCs. I mean, ideally, you would just never get assigned on CSPs. That would be the perfect wheel, as you would just continue to generate income against your, yield against your capital week over week, month over month, without ever being assigned. The reality is sometimes you will be assigned. It just happens, right? How do you determine if an option is overpriced? You can calculate the value of the option and then see how much it costs. If you're looking at your broker and it's telling you, a mid of like $5.40 a contract, and you calculate it and it's, it should be at like 4.95, it might be a little overpriced. Usually IV is a good way to just determine that on the fly. I have CSPs for this Friday at 350. What are the chances I get to buy some sweet shares at 350? Hmm. I don't know. For a Fubo, you might get some. I don't know. I have some 350 CSPs out too. I heard the CCCSP assignment question and answer twice so far this morning. Exact same answer. Had to check if I accidentally set the stream back in time. Ugh. What's going on with Upstart? Just shorting, following the market. Just stop worrying about it. Don't ask me about any of this shit until November. If you see an opportunity to sell CSPs on Upstart, enjoy it. If you don't want to sell CSPs on Upstart, well, I don't know why anybody would want that, but there's just nothing to talk about. Its price is irrelevant. It's staying within the same channel it's traded in for the last like 2 months. End of November. Don't ask me about anything till OPEX. That's the target period, right? Why the fuck would I care what price Upstart's at now? You're panicking because you're slightly red on January calls is not my problem. Any comment about Meta's cheap price? Define cheap. Lower than you think it's worth, but I don't think it's worth more than it is now. I would argue that Meta is still overpriced. I have $20 CSPs out for Upstart this week. I sold a couple more today. Next week with earnings, I'd probably target a lower strike than 20. Correction, Greg, it's trading on the same channel it's traded in for the past 6 months. Fair. Why do you think we'll run early for November OPEX? Not only liquidity issues, but there's a holiday during the settlement period, which could move up their timeline for covering. Do you think Upstart will have an OPEX run? That's usually when the obligations generated during reg show are cleared. I just left the Mormon church. What is SLT? What's early? Week before we should be out of CCs for GME and our OPEX position. Monday run. No, I don't think we'll run that early. I'll probably target like Wednesday to be in my position. So by like the 16th. Maybe end of day on the 16th. When selling CSPs, you want to choose a strike that is below your effective cost basis, right? How does that work when your cost basis is very low and you can't get a fill at those prices? You average up? I mean, that's if you're selling CSPs with the intent to be assigned. TA is useful for one thing and one thing only, and that's visualizing large amounts of data quickly. Thanksgiving. I'm referring to Thanksgiving. Thanksgiving falls during the settlement week. It's a bank holiday and markets will be closed. When did you open your first margin account? How much cash did you have in that account? I didn't open a margin account until later on. But my first account was 25,000. When I opened my first margin account, I think it had like about 50 grand in it. How come nobody will buy my CLVR CCs? Even the market maker doesn't want them. You're probably asking for too much money for them. You think it's likely that bad Upstart earnings will drive the price below 20? I mean, even if the earnings aren't bad, they can still short it. Robbie probably asked for more money. Fair enough. Jimmy said no, let Robbie go. What? The fuck are you talking about? Yeah, you probably need to build up your account value more. IBK are requesting a 100K minimum to ask for a margin account. I have more than that in there, but I don't feel comfortable to open margin yet. Probably smart not to then. You want to get really comfortable with your strategies before you start leveraging them with other people's money. On the Upstart chart, does that volume candle indicate that buyers came in and stopped the momentum to the downside? Yeah, a little bit. remember, you know, if you have a seller, you have a buyer. So you have a Black Friday wish list? No, I don't think I need anything. When does Ivy spikes back up? When does usually Ivy spike back up after an earnings crush? Is there something standard? Well, Ivy rises into earnings from, you know, the like historic volatility average, right? So, and then, you know, earnings, and then usually after earnings, depending on what happens, but generally speaking, Ivy crushes back down into that more normal range. Some earnings, you know, this will move up harder. Some earnings, it won't move up as much. It really just depends on the stock, but that's generally what happens. That's IV, not price. And usually in advance of that, the market will price in some, you know, percent move plus or minus X percent from the spot based on the increase in IV. So, you know, this can be like 5% or 13% or something like that, you know. Do you have 100,000 in a brokerage and you're not comfortable with margin? I mean, some people just aren't comfortable using margin at all. Upstart puts being priced so much better than calls. Why is it not a good idea to continue to roll CSPs out rather than getting assigned and sell CCs? Well, I don't mind getting assigned because I want shares. But yeah, you could just keep rolling cover calls out. I'm using the credit from CSPs to buy long calls. So I'm selling CCs and using the credit to buy long calls. Would you please share your thoughts on Peggy? Pineapple Energy. I don't like it. Seems like a piece of shit. I don't know. We'll see. We'll see if their margins improve again in Q3, maybe. I'm not particularly interested in this. There's solar. This looks like a company attempting to capitalize on government subsidies from solar. I can't say I like it very much. I don't think it has a lot of potential in the near term. They had some really, the previous 2 quarter reportings were pretty bad. But their net income picked up in Q2. I don't know, maybe this upcoming earnings will be good for them, but I don't really play earnings, so if they have another good earnings, it might be worth entering a position on for like a small swing to the upside. How much further do you think the VIX could cool down to? I've only started paying attention to it and trying to learn the feel for it. I mean, that depends on how much the market rallies or stabilizes to the upside. I'm probably going to close some of my short VIX positions going into the Fed meeting here. But right now, you know, VIX is moving up a little bit, so if we raise by 100 basis points, do we crash? That depends on how the 100 basis points is announced. So if they announce like 100 BPS for November, they're almost at their target rate, right? So if they do this, then, you know, the guidance, the forward guidance is going to be for what? 0? That could be bullish. But if they do this and the forward guidance is for like 0.25 or 0.5, we're going to go down. Limit your exposure to each sector to like 1 or 2 stocks. You know, it can't be that hard to put a few together and decide which ones are the best. I understand you don't play earnings. How are you going about Fubo's earnings? I mean, they already announced a preliminary report. It's not going to be that surprising, right? I just own Fubo for like the next 1 to 2 years. I don't really give a shit about their earnings. If it drops, I'll be assigned shares. Igor goes, doing some math here, 5K to 25K here, and the percent return needed 52 weeks, 3.25%, 26 weeks, 7%, 10 weeks, 90 days, 20%. I hope this helps anyone. I hope so too. Yeah. When I still paper traded and I was like trying to manage multiple like 5,000 accounts at a time and get them to 25,000, obviously without blowing them up, I would say that the majority of the successful accounts fell somewhere between, yeah, like 9 and 34 weeks. So it seems about right. I think it was 9 and 34 weeks. I measured them in trading days. I'd have to go look at my like old journals that I have somewhere. I used to keep really good track of everything. That's per week, yeah. Compounded. The year-to-date return is double the S&P, so I think I'm gonna keep day trader in my profile. All right. What happened to Cat just now? Ooh, little volatility. Sell off, maybe a big position. Not a big deal. Hmm. That's almost the same price I bought them for. Oh wait. Did you pick up any 3900 Cs for SPX? I was thinking about getting them maybe after the Fed meeting. If we drop low enough today, like 38.25, I might. I'm not gonna lie, some of this looks like, and I know this sounds stupid, but it looks like bullish positioning for the Fed announcement. Right? They're prices dropping into the lower legs of everyone's straddles means that they probably intend to close their straddles at the announcement, right? So remember, like, think about this positionally. Like, all the big institutions in the market right now are like right here positionally, right? And so if prices are being pushed down into the lower end of the straddle, that's because they intend to close this side first. Because now this side's profitable, right? So, let's not even talk about it like it's intentional. Let's talk about it like it's just an effect of, buying and selling in the market, and pretend for a second that the markets are efficient. This is profitable, and so capitulation on the short leg is more likely. What do you use for paper trading? A particular brokerage or app, or just an Excel sheet? Honestly, sometimes just paper trading on actual paper is fucking way better than trying to use an app. But some of them are pretty good. I think TDA's paper trading is pretty decent if you need to use an account. I made $14 last OPEX. It's gonna take a minute. Sometimes you hit big, sometimes you don't. It just takes time. Time, and nothing is more important than exposure, right? If you're constantly thinking about it and you're constantly exposed to it, over time, you're going to pick it up as a habit, right? You're going to build more and more confidence because you understand what's going on better and better. It just takes a lot of time. Isn't that analysis confirmation bias? Not criticizing because I do it too. It's burned me. Well, I'm trying to remove bias from it by, just considering which position is in the money and thus more likely to capitulate. Remember, as the price drops, more puts get more expensive, right? Ah, Brett, thank you so much. Welcome aboard, Purpley Outside. You're now a Cornichon. Sold some CCs on different stock for 340, 1250. Stock has fallen sub 12. But same calls are 350. Okay, you got $3.40 for a 1250 strike. The stock has fallen below 12, but the same calls are 350 to 370. Where can I start to look at what might be causing this? The stock is illiquid. It sounds like volatility went up. So even though the price is down, volatility is up from where you sold the premium. Once volatility cools, you'll likely be profitable on your position. So you just got to wait for more theta to decay. Please clarify exposure to people. They might get arrested for exposing too much. That's a risk you have to take. So far, I've been making some great small gains from exposure, around 20% on average. I usually close too early, but still making gains. That's all that matters, right? Like, think about that percentage, the percentages he just posted, right? 27, 350, like, or 325, like, profits are profits. They add up. The effect of continuing to make profits is cumulative. So the split was supposed to drive liquidity in the stock, but seemingly the opposite has happened. Why would that be if everyone short walked away? Well, everyone short came back, right? They walked away during the split when the split would have presented risk to them. And then they came back real hard after August, right? They shorted the fuck out of GME after August 16th. But, you know, retail keeps doing what they're doing and they keep buying more. We're going to see an immediate sell-off of the announcement, and then we're going to rock it. I'm calling... Watch and learn, Girk. I don't need to learn anything from you, Walken. You've already been wrong like 15 times in the last 3 weeks. Stop making predictions. Just sit back and learn something. Let's talk about exposure. It's a good thing. And also, you just said exactly what I said. You son of a bitch. Where did he go? There you are. Did I her correctly? 390 SPY 0 GTs are the play. Got it? YOLO? Absolutely not. That's super fucking risky. You think this is the beginning of the near-term rip you were talking about before the longer-term dip into next year? Depending on the Fed's decision today, yeah, very well could be de-engineer. I think this is an extremely pivotal point. You're still reading options of strategic investment. Could you please break down time value premium? Are you talking about theta? Do you want to be more specific, or do you just want me to explain theta? Pretty sure the book has the definition of theta in it. It's just weird how they word things sometimes. Yeah, I understand that. Yeah, time value, theta, same concept. Time value premium is the cost of theta and the price of the contract. But it's just theta. We have less rigid vernacular here on the stream, but tell me my 11, 18, 29 CCs are safe. They look pretty safe so far. When are you closing them? Are you going to leave them open through ETF FTDs? No, that's feta. How's your whole Grant? Do you think Upstart will react similarly to SPY when the Fed talks? No. I'm sure Upstart they will try to internalize as much as they can. I mean, if the SPY keeps grinding up, it'll put pressure on them, but for CPI, buy one put, one call that costs $1 or 10 or whatever, but the same price. Then sell the contract that is up over 100%. Can this strategy work? I mean, yeah. Except you're down the cost of the other contract. I thought Theta was the name that Facebook renamed themselves to enter the metaverse space. No, that's Meta. Yeah, Upstart might hit like 1750 after earnings. Maybe a little lower. I don't know what their earnings are going to be like. This is like near the all-time low for Upstart. I think the Upstart's all-time low is just below 20. Like no, it's just at 20. $20.13 is its all-time low. It's getting close. There's really stronger support in the higher range there, though. Like right around where it's trading now, like the high $20 range. $20.88 to $20.65 is the support range. Below that, it gets a little slippery, but it's never fallen below 2013. What are you looking for CSPs on Upstart? I already sold 20s. If I sell some next week into earnings, I'll probably sell them a little lower, depending on how much IV bumps. I expect them to short earnings, regardless of if they're good or not. Why do they want to short earnings? Because earnings spikes IV and they're short volatility. So they want the IV to crush out as quickly as possible. Will you buy more Upstart calls if it drops below 20 or just shares? Both. I don't see why I wouldn't buy both. I have a huge amount of exposure to Upstart. Like relatively. Most of it has been heavily discounted or free, but I still have a lot of leverage on it. I will be looking to use that opportunity to get nearer to the money calls. So that hopefully if it drops below 20, which I don't know if it will, but if it does, I'll be able to get some like 25s and maybe some 30s because I'm a little light on those. I have some 30s, but very few. So yeah, I'd be looking to get into like the $25, $30 strike range as well. Good morning, Trash. We're hitting delta neutral for GME anytime in the next week. We could hit it this week. It's a witch. Burn them. Overreaction. Do you like the fundamentals of Upstart? Or is this more of a swing play, ride the trend? It's not really a trend play. It's a over short through synthetic liquidity play. I actually don't think Upstart's a bad company. I wouldn't feel terrible about owning their shares for an extended period of time. They seem to run a pretty tight ship. And I think their product's valuable, but it's kind of a hard sell in a shitty like mortgage market, and you know, when lending is less incentivized to the consumer. But that'll start to turn around probably next year. So I mean, if you're willing to hold through like a 6-month window, then it's got some decent potential on the other side as well. I guess as a long-term play. No, it doesn't mean anything. It's just the OCC opening up options chains. Dow kind of doing its own thing. Yeah, Dow's not falling off as hard. There's not as much risk in the Dow, especially like the Dow 30. Stronger value investments, right? People aren't as scared of them. If anything, there could also be a evidence of like continued shift from growth to value. What are your thoughts on open for a long-term value play? I mean, I can't really analyze a long-term value play quickly. They're like Zillow, right? Like the less used version of Zillow. I mean, if they can survive a recession, which, you know, can they? Their debt's pretty enormous, and their cash flow is fucking terrible. Yeah, I don't know. I don't really see. I mean, there's not a lot to lose there, but I don't really see the value, at least right now. Cursory glance. Their revenues are okay, but they're not making any money off their revenue. Their margins are awful, and their debt is kind of daunting. Any Greeks on Upstart? I mean, yeah, I have them. I don't think they matter right now, but I can tell you what they are. Let's see. Yep. Gamma Max is at 36.67. Gamma Neutral is at 25. Delta Neutral at 27. Vega Neutral at 30. So it's collapsed below its Greeks. But it looks like it's being very, very heavily shorted. They're driving Gamma extremely negative on it, which looks good for OPEX, right? That's what we want to see. You want to see, you know, when we have a real OPEX on something, one of the easiest things to see, just at a cursory glance, is, you know, they drive prices down. They want it low before they cover, right? Not only does this allow them to position the upside and hedge, it means that when they start covering these, they're covering them from a very cheap price, right? So shorting into an OPEX is ideal. The only reason I have exposure on Upstart already is A, because CSPs have been so cheap, or so profitable that it makes calls very cheap, I should say. And because it was on Reg Show, and so it could have potentially ran at any time. So I wanted a great deal of exposure over a long period of time. Otherwise, I would have just entered on OPEX, right? But it's just come off of Reg Show, and I already have the positioning. So I'd much rather just average down and stay in it through the OPEX period. But, you know, if you're not in it, you could probably wait to enter till after like earnings and into OPEX. The risk of it running out of the blue off of Reg Show is minimized. My RevRQ 35Cs are up 25,000% today. Nice. Go to Applebee's. Enjoy yourself. CSP's on Upstart for November 11th at 20, paying $1.95. Shares at 18.05. Seems like a great play. Thoughts? I mean, it is. That's what I've been doing. Have you not been listening to me for the last hour? Every time someone's asked me an Upstart question? They've asked so many. I don't even know why. I assume because red candles make people scared. Listen, most options plays, especially if you're swing trading, do not spend the majority of their time positive. Now, if you're buying leaps on shit in a bull market, and stocks are incrementally moving up over time, then yes, your options positions will be positive most of the time, right? But in a bear market, your options positions, especially the long side, are going to be negative most of the time, with brief periods where they are positive. And generally on a swing trade, you're targeting a low, right? To buy in. And if that low persists, you're going to stay negative through this whole period of time until the realization of the upside that you were playing on. So if you're green on your fucking options position the entire time, that'd be very odd. Because you've either bought here or you've bought something that's just been moving up the entire time. Stocks generally don't move like this. You need to identify that positive period. You just need to have enough confidence in the positions you enter to hold them when they're underwater. Or just use a different brokerage or call them and ask them why. How does it work, Pickle Boy? I can't sit here and listen to you all day. Some days. I understand, man. Yeah, CSPs on Upstart are very profitable. Because they're buying there's a massive amount of delta skew. So puts are really expensive. Yeah, because I think there's going to be a better opportunity to enter Upstart after earnings. I entered Upstart early because I just said this too. I entered Upstart early because CSPs were extremely profitable, right? Very high credit for cash secured puts, very cheap calls. So I was able to get lots of long side leverage. It was also on reg show. It is no longer, which does change the ongoing potential for a run out of nowhere. So as long as the stock was on reg show, right, it could just rip on any given day, right? Just out of the blue, it could just rocket. Now that it's off reg show, it's more likely that it will fall into the periods of FTD obligations and OPEX, because this is the time period which is most advantageous to close obligations generated during the period that it was on reg show. But I already have positions open, right? So when it came off reg show, I could have closed them all, or I could just continue to add to them. And I have enough theta on them that I don't really care about waiting a couple weeks. If you haven't entered Upstart, there could be a better opportunity to enter after earnings. I am not saying that shit again. You want proof that my net worth is over 400K? But I don't have that. IBKR is the only options broker in my country. Why did you tell them you have $400,000? Just tell them you have 50 grand and tons of well, not tons, but tell them you have 50 grand and you're very open to risk. You're willing to have a relationship with risk. You start saying crazy shit like I have $5.3 million and, you know, Fidelity doesn't give a shit, but IBKR will usually ask you for proof because then they assume that you want margin also, right? They want to make sure you can meet a call. Sell your SPX calls before 2 p.m. No, I'll just buy some puts. I try. I do have a breaking point in my patience. I've been asked so many questions about Upstart today because it's, you know, fucking down, what, 5%? People get really panicky, but I mean, I think they just don't understand the play. So I try to explain it again and again and again and again. But ultimately, I don't give a shit if they're in it, so it's hard for me to hold that line. Like, I don't care if you want to play Upstart, right? I don't want to handhold you or babysit you through your position on it. I think it has good potential. I'm in it. If you're not, I don't give a shit. If you don't want to be or you're scared to get in it, I also don't care about that. So that's kind of tough. It's hard to have like an attachment to how you feel about your position in Upstart. I feel confident about mine, obviously, especially given all the negativity that I've had to listen to over the last 3 days. Hey Greg, just got out of the meeting. How does today's price action affect your outlook on Ape? Fuck off, dork. Back when I was in the SS school, it was easy for me to hold GME while my port was down 50%. Now I panic if I'm down 5% on a position. Then it's clearly not the position for you to be in, right? Any of these like over short OPEX plays are really, really risky, but the potential returns on them are insane, and you can get calls for free. So any validity in the upcoming maturation of 2-year swaps? Who says they're 2-year swaps? What if they're 5-year swaps or 10-year swaps? Let's switch gears. Is Upstart dead? No. Obviously not. You can get calls for free. I've been paying 65 cents a minute all this time. Is it Virtu or Susquehanna that's leveraged short the whole market? Neither. They're both hedge funds. They're both hedged. They might be, their edge might be short, right? Virtu's a market maker. They're probably very close to neutral, if not completely neutral. Susquehanna shorts volatility, but they hedge, you know, they hedge that. They're hedge funds, hence the hedge part. Very few funds are like net directionally short or like full short. Melvin was a straight up short fund. They're pretty rare. Sometimes they're very, very successful, but they also get blown up a lot. If red isn't your favorite color, don't be a swing trader. Yeah, that's pretty accurate, actually. Cat has a high degree of index exposure. On SPX position like 4100 for November 19th. How do you determine 18th? How do you determine where you would put your risk at? Breaking below a certain point, like 3800? Probably, yeah. I mean, I've got a little bit of theta on them. I'm not super concerned with the near-term drop, especially not today. I believe that the market will, there is a higher probability that the outcome of the Fed meeting will lead to the market moving up. I don't need it to move up a lot for me to capitalize. Fairly unlikely Fubo is able to secure NBA's exclusive streaming package. If not, how, if at all, will it affect Fubo? I don't think it will. I don't think there's any expectation in Fubo's cost of them obtaining exclusive rights to NBA streaming. Also, they have like Fox and ESPN or some other shit. Like they have other channels that you can watch NBA on their platform. Wouldn't Melvin long fund? He's probably just retired, right? He's made like a couple billion. That's the beauty of it. Owning a hedge fund is you just make money on the good years, and then when everything goes to shit, your clients lose all their money, not you. Decent bounce after Upstart cracked below 2075. Funds pulled it up, or do you think MM doesn't want it to fall below? Probably shorts covered. Yeah. I mean, market was rising too, so it's hard to say, but I'd imagine a little bit of short covering in that range. Remember, the shorts kind of need to get out. Can you confirm Girk November 11, $19 CSP at 148 premium would give $148 for 1900 risk if assigned? I'll take a look. For Upstart, you're looking at the 19 for November 11th. Put. Yeah, it looks like the mid on that is 146. So you get $146 for $1,900 of risk, which is a what? Like a 8%, almost 8. Well, no, it's like 7 and change percent yield, 7.5 or 6. Hold on, Walken. What is it? When my prediction comes to fruition, you will all no longer refer to me as Walken. For at that moment henceforth I shall be known as Stockstradamus. You just made the same prediction as me, but said it differently. And last night you said the market was going to crash and we were going to go to 3,400. If you're right and you start getting froggy in the chat, I'm just going to ban you from everything. You have 15 minutes of flaunting it. And then after that, full ban. I'll have Carl handle you. Roughly. For GME, if you say a drop below GN until OPEX is the most likely outcome. No, drop below DN. I don't know if they'll get us below gamma neutral. It'd be cool if they do. I mean, that's why you need more money to swing trade, because you have to take on more risk. Or you have to be able to manage your risk, right? Like Upstart, I've managed my risk by selling CSPs, which allowed me to build up a very cheap long position. So I don't care about the losses on the long position, right? Because it's all paid for with capital from CSPs. Wouldn't Plotkin co-stream? I guess I could hit him up. I don't know if he'd be down. But then you won't have a guy named Stockstradamus in your pickle jar. I'm okay with that. I'm looking at getting some exposure to Upstart, but I want to do it in a smart way. Do you know how to DRS Upstart? No. Call your brokerage and see where the best place to transfer it is. They'll know. I don't even know who their fucking transfer agent is. Jesus. When GME 2805? It already happened. Why would GME not follow the SPY if it rallies? Doesn't it usually do that? Well, because they can internalize GME, so that GME underperforms the SPY if it rallies. Upstart uses American Stock Transfer and Trust Company. Thanks for actually finding that out. No, I don't think it has anything to do with Mozart, and the rhyme may be a coincidence. Is selling GMECCs on 11.7 FTD spike risky if it has the rest of the week to run? It doesn't really have the rest of the week to run. I mean, if they cover ETF FTDs, they're likely going to short it for the rest of the week. Because then they'll have liquidity. They need liquidity to short. ETF FTD clearing gives them more liquidity to short. So generally, ETF FTDs are cleared, then short. Ooh, I wonder if Rentec is back in on GME. That would make sense about the buying pressure. Huh. They haven't played a cycle in a little while. Not since March. I thought so. Good to confirm the wrinkles here. The Upstart's DRS ticker is RevQ. Hey, Bob, at least someone wants to buy Revlon. Just saying. Minutes, 2 p.m. Where can I buy calls on Watkins Band and Carl's Mouse? If I buy both, same like Iron Eagle? Condor? Why are you timing out JFresh, Carl? I saw you do it. So touch my fucking cat. All right? You know, I'd still rather have Revlon than BBBY. At least one of those companies makes money. I don't understand where the SS confidence in DRS comes from. They all talk like it's clearly causing MOASS, when all we have seen is lower and lower price ceilings over the last year. Yeah, I really don't know either. But we see lower and lower price ceilings because people are buying fewer and fewer options, right? It's really not an effective DRS lowering the price. That's ridiculous. Carla's like a puppy you can't afford to keep, but because the puppy is cute, you can't keep it anyway and eat ramen all day. Fair. I know I've asked for this before, but have you got anyone from the industries reach out to you with a job offer because of the stream? A couple, but I've just ignored them. Mostly it's like brokerages and shit that want me to sell their products. But yeah, there's been a couple. There's been people in the Discord that have just straight up offered me jobs because they work as like financial advisors or for investment firms. My friends who are bearish on Apple keep talking about this Foxconn factory lockdown. Okay. It's okay. They're not even making the iPhone 14. Who gives a shit? They stopped production, right? So who cares if the factory's shut down? I mean, that's a best case scenario for a bond buyout on a company that makes no money. Revlon makes money and has value in its IP. It's actually a big difference, right? Like Revlon went bankrupt due to supply shock. Bobby's going bankrupt due to mismanagement. You know, Bobby's dumping equity onto the market as fast as they feasibly can to stay above water. Revlon went bankrupt without dumping a single share, right? The primary shareholder of Revlon hasn't sold shit. The primary shareholders of BBBY have all sold out, including institutional shareholders, besides their ownership interest in ETFs. They're very different. I'm just fucking with you. I'm not trying to compare them. But I mean, for a potential buyout, Revlon has more value. All of Bobby's value is wrapped up in Baby, and you know that's sinking as you know their margins decline and they're unable to support the overhead on running Baby, which they're very near to being unable to do. There's a reason that Revlon got a $1.4 billion loan for their bankruptcy, and the most Bobby could scrape together was another $400 million. Probably because they spent the last fucking loan they got on buying back their shares at the $20 range, only to sell them again at $4. I mean, the mismanagement of Bobby is probably why Cohen walked away, right? Like Revlon just ran out of supply and couldn't keep up with their order demand, which is way different. Revlon's still manufacturing and they're still making money. Like they have good margins. It's just, you know, their debt came due and they were in the middle of a supply shock, and the combined effect of that collapsed them. I said it before, my theory is that DRS is pushed by computer share themselves. From all points of view, DRS only benefits computer share and actually harms GME. I would say that they just took advantage of the movement more so than that they, you know, maliciously attempted to steer retail towards DRS. Not to mention for Revlon, the lipstick effect. I mean, Revlon's still one of the largest beauty manufacturers for, you know, several of the largest beauty product retailers in the US. Don't get me wrong, I don't think their products are very good, but people buy them, so they still have plenty of orders and they're working with their, you know, distributors and they're getting their supply chain at least up and running again. And, you know, they need to get rid of their debt, which is a big problem for them. But I think they're in a better position to negotiate their debt because their margins haven't collapsed. Bobby's in a really bad position to negotiate debt because they're losing money quarter over quarter. All good points, but Bobby sells Revlon products. I bet they don't pay their bills either. That'd be funny as hell if like Revlon went under because Bobby wasn't paying their bills. $40 million on 135 April 23 Apple puts today. Are they sold? Interested in your opinion on a firm. They seem to be growing like crazy, but burning cash. I think their intent was to sell over the last couple years, and they didn't get any significant buyout offers. And I think they're facing a mountain of defaults as we slide further and further into recession. Long term, but could be fun in the short term. But back to Upstart, you're looking at FTD exposure, options pressure, and event combination thereof to catalyze shorts closing and greens. I think they've just created they've used enough synthetic liquidity in its period on reg show in order to generate, you know, another volatile event. If they continue to short volatility on Upstart, I think it'll end up back on reg show again. It has really high insider ownership, so it kind of fails at a pretty spectacular rate. And then the shorts got overcrowded as you got real shorts coming in against the volatility short position that was already present. And that's what led to them being on reg show in the first place. What's the IP Rev has? Their entire catalog of products, which is under the control of one of their debtors right now, but it's definitely the first debtor they want to pay off. I believe the IP is all owned under Brand Co. But if they're able to pay off that debt or renegotiate it, they gain control back of their IP. Or if a buyer comes in, and the value of their IP portfolio is considered to be like in the billions. You know, proprietary formulas and things like that, scents, colors, you know, all of the shit that is highly valued in the makeup industry. You know, Revlon's existed since the 40s, so they have a lot of patents. Computer share stands to benefit maybe in the tens of millions of dollars. I mean, computer shares year over year profits have increased by like 3,300% since quarter four or quarter three of 2021. So computer shares made a lot of money. There's no reason for them not to, you know, at least lean into. They're definitely encouraged to at least lean into the DRS movement from a profitability standpoint. It benefits them to acknowledge it, provide customer service, and in no way try to hinder the flow of registered shares. Right? They make a lot of money in fees. Can we hear I can be green, I can be red right when the meeting starts? I haven't heard it in ages. Yeah, I could probably play it if I remember. Team fight tactics. Checkmate, Rob. Yeah, you know, I do think Cohen came into BBBY and just got like he got his 3 board seats, and I think that, you know, the people he put on that board were mostly ignored. You don't play video games. You haven't streamed a game in months. I streamed the new Guybrush game not that long ago. Return to Monkey Island or whatever. But yeah, I generally don't get a lot of time to play video games. I'm usually pretty busy. Does full bear even exist? Not until leverage is built up to the downside. We could drop a bit. I mean, we could drop down as low as like 3,700, but we'd probably stagnate there before, you know, more bearish positions were leveraged. There's just not a lot of leverage to the downside right now, so it would have to build up. My point was DRS benefits of short vol positions way more than computer share in the grand scheme of things. Oh yeah, absolutely. Not a real productive conversation because there isn't any way to dig into it. I mean, you could like paper trade a short vol position on GME and back test that, and it's quite a lot of money. Did you like Elden Ring? No. I mean, I did, but I didn't want to spend the time doing it. Hey, Gurk, I just want to say thanks for creating a great, safe degen space for people to troll you live and YOLO on 0 DTEs. Yeah. How close to 2 p.m. is too late to enter a straddle on SPY? I mean, Ivy's already priced up. So would you use margin to hedge the downside here in about half an hour? Because I'm about to. I mean, you could if you want to. Obviously, you know, you're increasing your risk if it doesn't go down. Assuming a 75 BPS rate increase, wouldn't the expectation be that the SPY wouldn't move as much as it is the most expected outcome? How confident are you on your calls? I'm pretty confident on them. I think it'll move simply because the benefit of calls being cheaper. That's really all you need, right? Like it's the more advantageous position to leverage. Also, there's a reason the upside leverage is higher right now. It's because Rho is going to increase with the Fed rate increase, right? And so people are buying far dated out of the money calls because, you know, if you have a $1 billion position, a bump in the risk-free rate is very, very nice for you, right? This place has turned into a better version of Wall Street Bets. Well, I like to think we make more money. I can recommend the current updated version of Cyberpunk 2077. Oh, I did play that when that came out. I haven't played it since they fixed it, but you think I should write it out or make an effort to transfer to a new account to avoid the taxes? It's a long time frame before things shake out. What? I have no idea what you're talking about, Mr. Goat. Oh, for Rev? I mean, it's up to you, but it's probably going to be like at least 4 months, I would say, through the omnibus hearings at a minimum. Thanks for teaching me so much about theta and risk aversion. You've helped limit my losses a lot over the past month. Thanks, man. Fubo candle. Cool. Somebody just bought some Fubo shares. Let's fucking go. Our good friend and upstanding pickle, mass spectrometer, wants to see... Where did it go? Wants to see the denim jumper pick. Oh, yeah, absolutely. We're talking about my AMC romper, or my AMD shareholders meeting romper, and so Trash Dan did a artistic interpretation of that for everyone. My arms aren't this buff in real life. This guy looks like he masturbates a lot. I don't have that kind of energy. Dude, chill him at work. Sorry, Potato Tom. Hey, there's things you were confident enough to purchase. Are you confident about them? Yeah, usually. I'll probably roll with what I straddled until there's some stabilization. Your calves are way better than that. I know. Did you know that GM is on Upstart? Oh, what Gamma Max is? It's like 36, I think. I told you to make the legs of the romper shorter. They're too long. Think 80s running shorts, less than 90s jean shorts. I thought there was a set rule against Dans being mods or admins. Mods, not admins, which is the loophole they're trying to exploit. But yeah, I'm pretty against putting Dans in positions of power. Especially when they make my legs tiny. Multiple massive put orders on Apple earlier appear bought. Okay. Maybe. Are you going to pull back your GME cover calls before FOMC today? I have November 18th, so I feel safe. But if there is VUPs, I could take advantage of that by repositioning. Thoughts? No. No, I probably won't. Assignment on them would be 28.30. I think I'll... Yeah, probably won't. See which I have quant news for you. How? I mean, they'll probably internalize the upside, and there's a lot of put interest. But yeah, you could be more at risk. Oh, the people who won't name their babies Dan to avoid the stigma. It's probably for the best. Did you add your SPX calls? No. Same like you, I actually don't mind. Almost want to be assigned. I mean, I don't have that many calls out, so I don't really care. I'll just sell CSPs. The cost basis on this account's like not very good anyway. And the other ones I have out were ones that they were like they're FIFO from like March, so yeah, I really don't give a shit. They're not like long-term holdings. I'm back, baby. Talked about my feelings about not abusing substances. Talked about how I haven't been abusing substances for 36 minutes until I buy 0 DT SPX calls and my Roth IRA. Healthy. But that's why I chose Carl, Darth, because I knew he would do that. I knew he would turn on you in order to gain my admiration. It was perfect. Fubo getting some volume. Yeah, a little bit. It's about this upcoming OPEX. If we don't see sub 26, it's not going to be anything like March. It will be proof of a massive lack of interest on the short vol side. Just maybe nobody gives a fuck about GM anymore. Thoughts? Buy and hold is so fucking boring. Yeah, I mean, I kind of agree that it would prove a lack of interest on the short vol side. Although we see interest already on the short vol side. I do think if they don't short us into the end of the ETF FTD period and into OPEX, that the obligations built might be not. I mean, they're not going to be as strong as March, I don't think, but they might be stronger than May. We'll see, though. They did walk away, so if you know, if we do get an OPEX and a decent run, and it's maybe a little stronger than May, but not as strong as March, then I think our assessment of their positioning has become quite good, actually. And I would feel more confident with continuing to play the cycles. But yeah, if we don't see anything, I'm done with playing the fucking OPEX cycles.
because clearly no one gives a shit. Also, everyone loses their money 2 weeks before OPEC's FOMOing into a 15-minute run. Just to be fully transparent, YouTube TV on a smart TV on 15X does not sound the same as 15X on a mobile app. Posted a short clip on the GME Discords. It was so amazing. Awesome. Has anyone pretending to be short volatility players ever messaged you threatening you to stop exposing their trades? No. At least if they have, I probably didn't look at the message. Are you hosting Freg's Day this year? Yeah, I will be. Will Ivy crash hard if I have a Jan 23 SPX put? Probably not. I mean, even November 7th puts are like relatively cheap, right? As far as IV goes, most of the IVs on the 0 DTEs, a little bit on the 1 DTE. Yeah, anything like next week, next week's options, the IV falls off really hard. So it's the IV isn't priced super high all the way out. Yeah, of course that's a pretty normal struggle. GMCC2. Quant data shows a 0.75 increase today. Okay. I mean, that's what I expect. I think that's the highest probability. The most important part of that will be, is the outlook dovish or hawkish? I think that'll depend. That'll influence whether we go up a lot or just up a little. So you think a GME can see around a $15 price increase if November turns out better than May but worse than March? Yeah, I could see that. Yeah, I could see like a 50 to 80% run, maybe. Above the price it enters OPEX at, which probably won't be this high. So if I position both sides longer dated straddle, that should be fine then with IV crash. Yeah, if you're dated a little further out, you should be fine. Why do I keep getting some shilly YouTube ad for investments in standard diamond coins? Is someone here bullish on diamond coins? I mean, clearly you've been looking up diamonds or coins. And Google targets the ads at your usership, right? So like whatever you're looking up, that's what those ads are being displayed based on. Corporate bond spot rate to the moon. Oh, fuck off, Google. Jesus. Any thoughts on TSMC 50% contract cuts? You can go short on TSMC. I'm gonna short Nvidia, but TSMC is probably a decent target also. I keep getting ads asking me if I'm alone and making white by myself. Seems good. So the Fed does 0.75 again with a dovish outlook. We could drift up for the next couple of days, weeks. Depending on the CPI print. It's people who are bag holders are the most vocal haters about Bobby. I made money and continue to buy at these prices. It's turned into a Gherk parrot sesh when he doesn't even follow. What? Why would you? Yeah, but if you made money, why would you buy more? And the thesis is broken down. It's the people who are most vocal about defending Bobby or the bag holders. Do you think SPY November 11 $400 calls would be a decent way to capture today's upside? Risky, kind of far out of the money. How much of a move do you need for this to get profitable? Like 100 BPS at least? I keep getting ads asking if I'm addicted to making unusual squiggly indicators. The answer is yes. I just keep getting ads for condoms and locations for child adoption drop-offs. So the universe is clearly trying to tell you something, turd. You've maximized your internalization of children. You have too many now. Your asymmetric tails are soon gonna collapse. Small ask here. Please repeatedly discuss all the possible FOMC outcomes from every possible perspective each time we have FOMC. Also, hold my hand while I cross the street. Some Bobby bag holder that is down 44K is saying, time to buy some more Bobby. People really did not learn anything from GME. I mean, the RBBBY Reddit is pretty good evidence of that. They not only did they learn nothing from GME, they also learned nothing from AMC, which I suspect many of them were also investors in. Just because someone wrote a DD about the best course of action for BBBY if their bondholders agree to it, does that mean their bondholders are going to agree to it? I could write super bullish shit about GME all day. It doesn't mean the company's going to do that. Who's a meltdowner? We all fucking made money on Bobby. That's why we don't give a shit about it. Well, most of us did. Some of us bag-hauled it into the ground, but... I was long AMC and missed the $76 all-time high, and have been kicking myself ever since. Sorry, dude. Does SPX bottom out below 3,000 in 2023? If it crashes... No, you didn't get an out, Pigeon Teeth. Sorry. I made money and lost it. Fair enough. We spent the next 22 minutes decorating the screen with Bull, Pickles, Bear Pickles, Guybrush, Steffens, and all of our favorite characters. No, that's only for OPEX. Sorry. I can't just be doing that every day. Then people want it, and it's a pain in my ass. Straddles are at the money. It seems like you did fine. Where do you think the SPY lands at on Friday this week? I don't know what the fucking rate increase is going to be yet. We either land above 3,900 or we land below 38. But it all depends on what JPOW says today. Pretty sure 80% of the money made in Bobby went to now dead Rev 35 season shares that are down 80%. I don't know about that. But it's possible. $38.50 it is. Second AMC literally gave Citadel a special room to watch Top Gun. Probably. I thought that, you know, the second they diluted their stock like 2 times over, that people probably should have sold. Sent you a DM in the Discord. Ortex official Reddit account posted on SS. TLDR, one of the third-party companies they get data from, incorrectly merged borrowing and lending data, causing inaccuracy. Sure. Sure they did. So it was all bullshit, like I said it was? Ortex sucks dick. When we were cashing out of BBY gains, Rev was like $6-7, which is a lot of people's cost basis. Well, you better hope they get bought out for more than like 700 million then. If we run, say, to 39.50, I mean, depends on how hard we run to 39.50. Would you still be holding the 4,000s and 4,100s or sell and reposition? Yeah, that'll just depend. I could reposition, although I don't really like the idea of targeting a much higher range than that. I don't give a fuck what the Bobby Bagholders say. Rev was a great play and didn't realize the potential. I mean, I turned 10 grand into $100,000 on Revlon. Now, albeit I lost all 100,000 of those dollars mostly on Revlon's delisting, but there was still a lot of money to be made on it. So it was awesome all the way up until the point where it got delisted. And if it hadn't been delisted, on the off chance, there was a lot of money to be made there too. So if it's not Ortex data and it's not Bastille Day, it's got to be Moonjam. I don't see what else it could be. It's the trees in the background. I mean, it was, right? But that was the deal with Revlon. I think there were some people, some very specific people, that overexposed themselves to Revlon options with no consideration of the risk of delisting, even though I spent weeks and weeks and weeks telling people that it could just go to zero. So, what are you going to do, right? I did everything I could to warn people of the potential risk. It's okay. I made all that money back on Cat, like, and SPX. More than. So, yeah, I'll just write it off on my taxes or whatever. If Rev goes to 6 again, I'm going to be rich. Show me what that MOASS do. Thank you, Oliver. 15 minutes. Rev's still on Reg Show. I forgot about that part. Damn it. I remember like it was yesterday. You were on stream and said, only play Revlon if you're okay with losing every penny you put into it. I sold a profit right after that. Nice. If you guys think that the opportunity to like 10 or 20x your money comes without risk, you're insane. T-minus 15 minutes till showtime. Yeah. Remember that feeling during the rev halt? That fucking feeling. Even you got 10% emotional. I hated the outcome, but those feelings rarely come free. Yeah, it's true. That was a big moment. Just gonna move back to 3850. I covered it in the daily DD if you want to know about the possible Fed outcomes. How much room has GME to move up if the market rips? Well, there's a pretty solid fucking wall of negative gamma at every price above where GME is currently trading. Also, they probably dumped off a shitload of internalization first thing this morning. So I think they're ready to absorb it. Can you tell me what you just bought so I don't copy your plays? I just entered the straddle. I haven't gotten filled on both sides of it yet, but I should get filled on the other one right now if the price just drops a little. Yep. Can you go through how negative gamma works to prevent upward price movement again? Yeah, they can use it as like a barrier, right? And if they short into it, then the market maker uh, essentially doubles the power of their short, right? So the market maker sells into the falling price. And so by skewing the market maker hedge negative, they're able to get the market maker to exacerbate the effect of the short position that they're buying, creating kind of like a hard wall. Who was stealing pictures of atomic spreadsheet of FTDs that you had to watermark it? Anytime I like put out any data that could ever be interpreted as bullish on GME or any stock, it immediately gets stolen by like 9,000 fucking Twitter finfluencers. So I'm just getting tired of it. I'll probably create a better watermark in the future and just put it on everything. That way, at least they look like the assholes they are for copying my data. No, I like the current watermark. Keep it. All right. Ow. Watermark legit data. Put out fake data with no watermark. If 50 BPS no shirt, man, I'd make a lot of money. I don't know, maybe. It'd really have to run super fucking hard. Since you have them, I don't like spending money. Just because I have money doesn't mean I like blowing it on shit like chairs. I do need to get a different chair, but I don't know. I'm really cheap. It's tough. I literally do lead gen and internet marketing for a living, among other things. So turning everything you do into lead gen is huge. Oh, okay. I don't know. I just want people to look stupid for stealing my data. I'm mean 2 chairs for 7 to 800, and all that time to me is the same as 800 to 1K. Fair. This is the only chair I bought, though. You're talking about the one that never arrived? I mean, they did eventually give me my money back for that. I'll give you 50 bucks for your secret lab chair. Dude, I'll auction my secret lab chair off for thousands. I think you underestimate the number of people in this Discord that would pay $1,000 to sniff my chair seat. It's at least 2. How do we manage our SPY SPX straddles if volatility goes bonkers? Have fun with it. I'm not getting another one of these. I'm gonna get just an expensive chair that I don't have to replace. But I also need to find time to like go out and go to like the Steelcase store and test them. 10K for the chair, see? Already one offer on the table. Don't front run my jokes, man. If only I could get you a Steelcase Leap or Gesture from employee sales. Man, the struggles of working at Steelcase. Wait, you work there? Which one's better, the Gesture or the Leap? I did buy a monitor, alright? It's right there. I just haven't affixed it to my desk. Think about the disparity between how much time you spend on bidets, where you spend a few minutes a day, and how much you'll spend on the chair, where you spend at least 40 hours a week. I didn't spend that much on the bidet. It was like $300 or something. If you could only do one physical exercise for the rest of your life, which would it be? Burpees. Or squats. Probably burpees. How much flexibility do I have with it? If you bought, well, I thought this chair would be fine at first. In my old chair, I didn't care because I didn't spend as much time in it. Your watermark should literally be the destination you want people to find your content. As a watermark is nebulous, it's no one knows where to find that. I suppose that's true. Well, so many people liked these because I'm like tall, and they were like, "Oh, I'm tall too." Steelcase is great. I've had one for years. I got so many amazing reviews for Steelcase or for what fucking Secret Labs before I bought it, and I was like, "All right, I'll give it a shot." But it's like buying a bed sight unseen, right? That's why mattress stores still exist, because there's value in being able to go and like see if you like the bed. 10K for the bidet. It's all yours, Carl. But wouldn't you just squish through the foam? Initial very bullish reaction. All right, let's see what the FOMC minutes say. All right. Recent indicators point to modest growth in spending and production. Job gains have been robust in recent months, and the unemployment rate has remained low. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures. Blah, 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 blah. The committee seeks to achieve maximum employment inflation at the rate of 2% over the longer run. In support of these goals, the committee has decided to raise the target range for federal funds rate to 3.34 to 4%. The committee anticipates ongoing increases in the target range will be appropriate in order to attain a stance. So they're raised. Oh, Jesus. So they're targeting 0.5? Jesus fuck. Well, it says they're raising in the range of 3.75 to 4%. Overnight repo to 3.8. Raise the interest rate paid on reserve balances to 3.9. This looks pretty fucking bullish. The current rate's at 3.25 though, not at 3. Yeah, it's 0.5 to 0.75. So 50 to 75 BPS. Yeah.
I can be green, I can be red, I can be violent upside, I can be hurtful, I can be full, I can be anything you'd like. I can be green, I can be red, I can be violent upside, I can be hurtful, I can be full, I can be anything you'd like. I can be green, I can be red, I can be
Where's
violent
walking?
upside, I can be hurtful, I can be full, I can be anything you
That's all
like.
I care about, right? I care about the
green,
money.
I
Where's
can be
walking?
red, I can
Fuck
be
you,
violent
walking.
upside, I can be
Fuck
hurtful,
you
I
and
can
your
be
man.
full, I can be anything you like. I can be green, I can be red, I can be violent upside, I can be hurtful, I can be full, I can be anything you like. I can be green, I can be red, I can be violent outside, I can be hurtful, I can be full, I can be anything you like. I can be green, I can be red, I can be violent outside, I can be hurtful, I can be full, I can be anything you like. I can be green, I can be red, I can be violent outside.
I just wanted to get that in before we drop back down to 30.
I can be anything you like. I can be green, I can be red, I can be violent outside, I can be hurtful, I can be full, I can be anything you like.
Well, my strangle printed. Nice, man. Did I miss FOMC? Yeah, a little bit. It's looking pretty bullish. Father Jerome speaks in Father Jerome speaks in 25 minutes. Yeah, that is a so for anybody who's ever asked me what a bull flag is, this is a bull flag. Big volume, tight consolidation. Close them, leave them open, close them. Oh, there's so much call interest at 3,900, and we're so close. Jimmy Stack, man, it's internalized, right? Big put positions and internalization. It's a neutral decision. Sorry, just managing some stuff. I think we'll see a dip. I don't know. SPY resistance, 3090, I guess, or 3900 for SPX. No, stream's not halted. So I closed the long side of my straddle. I'm going to leave the short side open for a minute in case this downside gap fills. GME will fall as internalization pressure falls off. Gotta love Vega. Yeah, it's good stuff. Why revenue up with the market? This gives what we could have hoped for basically for now, isn't it? Yeah, just about. We'll see what Powell says. His hawkish or dovishness could be very integral in continued performance. But yeah, move up into this range where call pressure is stronger is very, very good. Am I dreaming to think Jimmy will break 40 again? No, it's just not going to happen right now. All of Jimmy's like moves greater than, 50%, let's say, have occurred on OPEX. So all of the big moves on GME have happened on OPEX. I don't think there's any reason to expect them at any other time. There have been like 4 or 5 instances of moves greater than 30% outside of OPEX, and 3 of those are probably just liquidity grabs. Oh, this is long-term very bearish, right? Like these rate hikes are gonna, the realization of the damage they're gonna do is still in the future. When do you plan to bid out longer dated SPX calls, if at all? I don't know if I'll go with anything longer dated. What does the market do with the results of this meeting up until SLD? I think we continue to see upside. I think the bullish positioning is already getting stronger, and this will only strengthen it. I mean, puts in the 3830 range are getting obliterated right now, right? Is there any way to determine if Rentec is buying into GME before OPEX? They're 13F, which I think is due before the OPEX run, so that could be a big deal. Well, now we see if long vol positions get squeezed out. Nice, man. I hope it hits. Over-leveraged Upstart bull put spreads are saved. Huzzah. Congratulations. No, long volatility is shorting. Short vol is long. Yeah, okay, you got it. I see. Have you set stops? On what? I already closed my my straddle. Well, the long side of my straddle is closed. This stabilization in this high range is really bullish. If you compare it to our previous Fed meetings, generally we don't stabilize for this long a period of time after the initial spike or drop. Only 0.25 in December, correct? No, 0.5 is on the table for December. Target rate of 3.7. Oh yeah, so 0.25 for December. Sorry, I didn't see. I didn't get what you were saying. Or no increase for December is also on the table, right? The pullback of the target range is bullish from 4.25 to 4. I haven't been playing both sides this whole time. My call went 150%. I'll wait for the put to go, but if it doesn't, it doesn't matter. Yeah, that's kind of the nice part. The CPI coming up can cancel that no more hikes theory, potentially, depending on what range CPI falls in. You're presuming like another rapid growth in core inflation, but if CPI is shown to be diminished, that could be really, really bullish, right? Like if CPI is falling. Yeah, rates were hiked. 75 BPS. Neutral. Do you still see 3,900 today or tomorrow happening? We're very close. There's a lot of pressure there. It's possible. Are you gonna air the presser? Yeah, I'll throw it on. I'll probably grab some food while I do. Yeah, I'll stream Powell's speech. It's been a boring day so far, so we'll have some stuff to do. My broker doesn't have SPX. How can I play it? SPY? That's like the next. Or you can play ES futures on a different brokerage. I sold Fubo CC on the spike. Weekly 4 or 15 a contract and 45 for 0.08. If they expire worthless, my $4 leaps cost basis will be down to 0.3 a contract. Nice. Isn't a Fed pivot the magic words the market wanted to justify a rally? With 0.25 and 0.5 all on the table for December, surely this is the gas the market needs to push us up well into the 400 range. Yeah, no, I agree. I mean, that was my whole thesis. Not only that, pushing up into those ranges is probably going to start a cascade of prime lender de-risking. That plus, yeah, a bullish run plus the rate increase is gonna really, really dry up treasury collateral. I haven't been wrong about a Fed prediction, I don't think, all year. Maybe I was wrong on one, but I don't think I've been wrong on any. I'd have to go back and look. Secret Lab CEO stays in a $65 million house in Singapore. Well, yeah, I mean, if you can convince people to buy a lot of shitty chairs, you can make a lot of money. Prime lender de-risking, same like possible short squeezes? I mean, not necessarily short squeezes, but margin calls. I think it wasn't August, it was July. When it just kept rallying. I wasn't wrong about the Fed's decision. I was wrong about the market's reaction to it. Where do you see Fubo being repriced to after November 18th? Higher. I think Fubo should be able to sustain a price of like $5 to $7 right now. Seems very reasonable given their increased subscriber base. Obviously, you know, we'll see what happens with their earnings if there's any changes. So squeezing out long vol market wide would probably mean very big ups for our overshorted companies, Fubo, and especially Upstart. It's not like I don't have plans, you know. Well, back to just walking, I guess. Shucks. Carl, you can stop timing him out. He's gotten rid of his Stonkstradamus name. It's time for a shirt off. Your buddy Adam Aaron found more gold. You know, there was another time that long vol positions got squeezed out of the market real hard. And if you think back, you might remember it. Very good, Jettle. It's Jan 21. Yeah. Well, leading into January 2021. It started in, the fall of 2022, continued out through January 2021. When GME and MOASS, yes. Yes. MOASS won. That was 47 years ago. I know, but if you listen to the tales our grandfathers told. Wait a minute, it's fall right now. Really? That's crazy. Keep on shilling, Pickle Shill, but seriously, thanks for all you do. Made it a nice little penny on that move. I would never have learned all about trading I have if not for you. Thank you so much, man. I don't pay to be a member to be asked questions I don't know the answer to. We about to hit MOASS number 2? I don't know if GME will. It could. The short interest isn't nearly as high as it was then. But remember, first they try to short more. That's what really digs them underwater. That's their response to this kind of stuff. Is like, it's okay, guys. We'll just short more and everything will be okay. And then they short more and they short more and they short more. And then it's not okay. And then they get blown the fuck up. Long vol means short equities? Bingo. No, this isn't OPEX. What's this MOASS 2 bullshit? What a shill for real. After the first MOASS happened and everyone bag-held through it. When GME went from fucking like $3 to 480. Made 14K on that FOMC. Now I'm off to play in the snow. Thanks for the confidence, Pickle. You're my favorite. Also, Spy 3900 today. Maybe. We'll see. I think 3900 is a possibility. JPOW 230. Yeah, I'm gonna get it loaded up. Hold on. That was just a sneeze, Gurk. Sure. It was just OPEX, actually. Wait, I'm still a billionaire? With my trading prowess, I really could use that scratch. Thank you, Baradactyl. Congrats, guys, on killing it. What MOASS is this time? Depends on what's most short. Selling any CCs? I just bought back my 27s. I'm gonna resell them when it moves up a little bit. It's too much volume on SPX right now. Do you know what MOASS means? Do you? Clearly fucking not. I went from buying GME at 400 on Cash App to investing in bankrupt companies. Progress? A little bit better. I hear Rev has a lot of FTDs. It's on Reg Show. Did you buy back 27s at a loss? Yeah, $200. Oh.
Families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food, and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Colby.
Pivot.
Thank you, Colby Smith with the Financial Times. On the need
I
to
didn't
slow
hear
the
what he
pace of
said.
rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So what I want to do is put that question of pace in the context of our broader tightening program, if I may, and talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So On the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement, because that really does become the important question we think now, is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last 2 press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming. And it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last 2 meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember, though, that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
Nick Tamarosa, the Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high 4s, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward, a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what
J. Powell's known squiggle charts
would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, many different people who publish an assessment of underlying inflation.
Thank you.
Any companies that come to mind to target for taking advantage of a bad credit boom?
Hi, Chair Powell. Thank you for taking
Value
our questions.
investments,
Tina Smilek, New York
people with
Times.
low debt.
I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter-term inflation expectations moved up between the last meeting and this meeting. And we don't think those are as indicative, but they may be important in the wage setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we have, we're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do. And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy. And trying to make good decisions from a risk management standpoint. Remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into
This is bullish, the trend.
into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently
It's
restrictive,
not,
and
since you
we
just
don't.
said
Of course, we
he's
don't
not
really know
gonna pause.
exactly where that is. We have a sense, and we'll write down in September. Sorry, in the
Literally in
December
the last
meeting,
1 minute.
a new summary of
puts are
economic
printing.
projections, which updates that. But I would
Which is
expect us to
cool.
continue to update it based on what we're seeing with incoming data.
Slip two
Thanks,
Jansen
Chair Powell,
and make
Neil
a
Irwin with
sandwich.
Axios. As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of labor market,
Seems like
consumer demand.
19-month
A
of
lot of sectors you
inflation
don't
is
see a
supposed
ton
to
of
be
effect.
uber bearish.
Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you
We'll see.
at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which
SPX has
policy
been
works
having
have
a
changed
seizure
that
for the
much. I
past
would say
hour.
a big channel is the
Just
labor
gotta wait
market,
till
and
the
the labor
speech
market
is
is
over
very,
and see how
very
it shakes
strong,
out.
very strong. And household, by of
Call
course,
positioning still kind of strong.
strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to
real
get
wages
inflation
usually
down.
stay
It
negative
I
during
think you
inflationary
see from our
periods?
forecasts and
Always
others that it will take some time
increases right now are
for
being
inflation to
eaten
come
up.
down. It'll take
And so,
time. We think.
ask me again after. and I'll
So,
get to that.
sorry, was I getting to your question there? Oh, housing, the housing part of it. Yeah, so, we look at housing, of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline, you're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by the lenders. So it's a very different situation and doesn't appear to present financial stability issues. But no, we do understand that that's really where a very big effect of our policies is.
Hi, Victoria Guida with Politico.
I
I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typally the single statistic you would look to. Is at a 50-year low, 3.5%.
I don't think it affects
We're getting
it
really
one way or
nothing
the other.
in labor supply now. We had, I think, a very small increase this year. which we had really thought we would get that back. Most analysts thought we would get some labor supply coming in.
No, we lost
You mentioned
about
wages,
50
so
points,
I guess I would characterize that as sort of a mixed picture. It's true with average hourly earnings you see. So I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation,
which was
assuming a reasonable productivity. There with the ECI reading this week, again a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside that if you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening is happening. And maybe that's there, but it's not. It's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level, both ECI and average hourly earnings. We want to see. We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought because the data series is volatile. We never take any one reading. We always look at 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, I guess as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can.
Dockish?
Once you see it.
I mean, he's all over the place
You're in
today.
trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I like this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine. And, we're seeing China's having issues with the zero COVID policy and, much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries, but, we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy. And we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve for the long run.
If I could just follow up on that.
Why hasn't the VIX moved very much? Because
The Fed has acknowledged in the past
everything's neutral.
that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we don't directly affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have strong, in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep longer-term inflation expectations
I traded the
anchored
stuff out of the straddle
and keep the
today,
public
and it's all
believing in
thanks to you,
2%
Pickle.
inflation by the
I
things
learned
that
so
we
much,
do,
we
even
increased my port
in
10% a
times
week for the last few
when
months.
energy is part
That's
of the
fucking
story
awesome,
of why
dude.
inflation is high.
Congratulations.
Hi, Chair Powell, Janelle Marte with Bloomberg. So the Fed is facing two more ethics-related incidents with the revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of us, one of the policymakers, violates or falls short of those rules, we do risk undermining that trust, and we take that very seriously. We do. So at the beginning of our meeting yesterday, actually, we had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's, we now have a central group here at the Board of Governors.
Did
that
Bostic
looks
go
into
long?
disclosures and follows them and approves people's disclosures and also all of their trades. Any trade anyone has to make was covered has to be approved, pre-approved.
I thought you guys weren't trading
and there's
anymore.
a lag. It has to be pre-approved
The
45
Fed's
days
jumping back in?
before
I'm
it
buying
happens,
more
so there's no
fucking
ability
calls.
to game market. So it's a really good system. It worked here. And I think we all said to each other yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards and avoid these problems.
Do you have an update on the investigations that are pending?
I don't. So as you know, I referred the matter concerning President Bostic to the Inspector General. And once that happens, I don't discuss it with the Inspector General with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that. So that's what he's doing.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power. And you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well, so we do monitor the near-term forward spread. You're right. And that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted. And also, you have to look at why things, why the rate curve is doing what it's doing. It can be doing that because it expects cuts or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
If I could follow up, you also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that that risk assessment has changed a little bit?
Well, what's happened is time has passed, and we've raised interest rates by 375 basis points. I would not change a word in that statement, though. I think until we get inflation down, you'll be hearing that from me. Again, if we over-tighten, and we don't want to, we want to get this exactly right, but if we over-tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the pandemic episode, we can support economic activity strongly if that happens, if that's necessary. On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road and you're realizing inflation behaving the way it can, you're realizing that you didn't actually get it, you have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to rates, and I don't know what we'll do when we get there. By the way, we'll have to see. There's been no decision or discussion around exactly what steps we would take at that point, but. The first thing is to find your way there. You just said you can pump the market
if it's needed at any point. Yeah.
Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing. Home sales are down 25% in the past year and so forth, but none of this is really showing up, as you know, in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because for that reason, that conceptually, that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of it's a reweighting of tenant rents. The private measures are of course good at picking up the at the margin the new leases, and they tell you a couple things. One thing is I think right now, if you look at the pattern of that series of the new leases,
everyone's worried about
it's very pro-cyclical.
Yeah,
so
because
rents
all
went
the
up
hedge funds
much
don't
more
want their
than the
securities
CPI and
blown
PCE rents did, and now they're coming down faster. So the implication is that there are still, as people as non-new leases roll over and become and expire, right? There's still in the pipeline, there's still some significant rate increases coming, okay? But at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware of that, of course, and we look at it. And but I would say that in terms of what the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
You know, we're not targeting any one or two particular things. You know, our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important
listen,
step.
our company's owned by Jamie Dimon. He's extremely short the SPY right now, and we're worried that you might blow up his puts.
I've also said that
if
we
you
think
could do
that the
us a
level
favor,
of rates
please
that
weigh in on
we
that.
estimated in September,
Why
the
can't we just
incoming
have
data suggests that that's
transparency
actually
like
going to
that?
be higher, and that's been the pattern. I mean,
Why
I would
the
have little
dance,
confidence
you
that the
know?
forecast, if we made a forecast today, if we were doing an SEP today, you know, the pattern has been that one after another they go up, and you know that'll end when it ends. But there's no sense that you know that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing
Sleeper cell
strong policy
YouTubers.
and doing that too soon. So those I control those messages, and that's my job.
Edward Lawrence with Fox Business. Thank you, Fed Chairman. So how big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back to the 2% target?
You know, in theory, it was a headwind this year, but I do think the broader context is that you have
What do you think
households
Jimmy will
that
do the
have
next
these
few weeks?
significant
The same thing it does
amounts of
every time,
savings and can
Pinky.
keep spending. Even in, so I think those two things do tend to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking.
I think at the
but,
timeout was
people
fitting
and
fluffy.
the
Rose has been
banks
on
that
one
deal with
today.
retail customers.
All lit up because I said
many
MOASS
retailers will
already
tell you that the
happened.
consumers are still
you know how they
buying,
get.
and they're still they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that play into your thinking about the future?
You know, it's demand is going to have some support from those
Still think
savings,
bullish? Yeah.
and also from the strong demand that's still in the labor market. We still see pretty significant
end of the day, it doesn't
demand
matter what he says, right? It
a
just
tightening labor
matters
market
the
in some
numbers they put
respects.
out.
Although I think overall, I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that, you know, our job is going to require some resolve and some
Rose
patience
is the color
over
of all
time.
the SS
We're going to have
Kool-Aid
to
they've
stick
been
with this.
drinking.
And you know, that's just we take all that as a given, but we know what our objective is, and we know what our tools can do, and
You guys don't have stimulus.
that's how we think about it.
They do.
Thanks. We'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer from Marketplace. I'm wondering, has the window for a soft
Gensler?
landing
Is that
narrowed?
Gensler's sister?
Do you still think it's
Genser.
possible?
Okay, never mind.
Has it narrowed? Yes. Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path. It's narrowed. I would say the path is narrowed over the course of the last year, really. Hard to say. You know, again,
It's Genser.
I would say
I thought
that
I heard
the-
Gensler.
the
But it's
sort of
Genser
array
with
of
Z.
data in the labor market is highly unusual, and to many economists, there is a path to. Ordinarily, there's a relationship to GDP going down and vacancies declining, translating into unemployment, or there's Okun's law. So all those things are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. all I would say is that the job losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. Again, that's going to be something we discover empirically. I think no one knows whether there's going to be a recession or not, and if so, how bad that recession would be. And our job is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
But just real quickly, why do you feel like the window has narrowed?
Because we haven't seen inflation coming down. The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side problems had resolved themselves, we would have expected goods inflation to come down by now, long since by now, and it really hasn't. Although it's more and more challenging over the course of this year, without question. That means that we have to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
I blow my year-long 10-minute banner for this re-RS. Gen Zer? Oh. All right, well, that was fun. Well, I'm glad he's done opening his mouth for the day. Well, he tried to stay as neutral as possible, in line with their expectations, I think. He said some things that he probably didn't need to say, even though they were true. But we'll see. SPY's still stabilizing above 3,800, so I'm not that concerned yet. The recession started months ago. Well... How are we feeling about the market upside now? Any different? No, I think the effects of the increased rate are still going to increase yields on long-dated treasuries, which is going to put pressure on banks to start calling back short positions and margin and reducing their risk present in the market. So, no, I don't think we fell enough really to do anything besides ensure that the put straddle's cleared. My put straddle did. I haven't stopped out of it yet to the upside, but I'm fairly close. They all mostly asked him the same question, which was, aren't you worried that the delayed effects of this are going to have far greater implications over time? The one guy, obviously very worried about the yield curve, because he must own so many bonds, personally, as a journalist who works the Fed circuit. Yeah, yield curves are going to go up, and that is going to put pressure on prime lenders. It's also, increases the rate at which margin is lent. I think everyone forgets that. The margin is affected by the federal fund rate. And so it becomes harder and harder to obtain more margin, which means it becomes harder to leverage positionally. Either way. So you have kind of a lot of factors working against the holding of open short positions in the event the market doesn't crash. They're very exposed to risk. Also, with Roe sliding up, that's going to devalue those positions, which also eats into their margin. Or is this bad for Fubo? It's really not. You're just seeing the effect of active funds on the broader market. Yeah, negative global developments will intensify, right? Because every time they bump the rate, they strengthen the dollar. Why did you hold your 4100s? Well, we'll see what happens. I don't like that. I have a little bit of time on them, and the risk I have on them is not super substantial. I'll probably buy a few more. We'll see where this kind of balances out. I have a range where I'll just cut them. They're far enough out of the money that they're not super affected, but this is a big drop. We'll see how much it pulls back. There's a longer term trend here, you know, that's we're still very much in line with. So I expect once the sadness of the moment shakes out, that we'll see more positioning based on the actual data, which is that, you know, a 0.75 increase was already priced in, more than priced in. The 0.5 increase for December is already expected. I'm sure as the Fed reaches out and starts speaking over, you know, the next couple of weeks, we'll have a little more volatility with the market's opinion of what they're going to do. Where do you see Apple's support? What's Apple fall into? $146. I think I found support in this range previously. Dipping a little bit below support here. It's below risk. I mean, what you do with that's up to you, but you know, you could either use this opportunity to average down, looking for a reversal here at 144, or you could use it, you know, to assume a breakdown and buy puts to the downside. I still think puts are kind of risky. I really don't want to leverage the downside. But we'll see how it plays out. I mean, that's all you can do, right? Everyone assumes that like this kind of information just means up, just like straight up, but that's not like the intraday reaction, right? Like remember that there's an obscene amount of positioning surrounding this Fed meeting, both to the up and downside, right? And ultimately we'll see where leverage lands. But I think it's too early to make a decision, and I'm confident enough in my positions I don't see a reason to close them. But if you see a reason to close yours, absolutely, you know, cut your risk or whatever you're going to do. I think most of my long position on SPX was just paid for with the straddle that I had open for 30 minutes. So but why the sadness at all? I mean, because people don't like to see red candles. People buy the top, and then they get upset when it doesn't stay there. The market's now slipped below net negative gamma again, which means, you know, sellers are selling into the downside, so the downside is less stable. But buyers, you know, market makers will hedge into the upside if buyers come in. With market put biased, isn't leverage going to be stronger to the downside? I don't think the market is put biased. Any major earnings left in your opinion? Also, is October CPI the next major market news item? Yes. Well, yeah, the report for October, which is next week, I believe. And we have some more data this week. We have balance of trade coming in tomorrow. We have non-manufacturing PMI and like global composite PMIs, right? Is that this week? Yeah, that's this week. Hold on, let me see. We have non-farm payrolls and unemployment rate into the end of the week. Next week, CPI on Thursday of November 10th. But you can just buy to the downside. Like if you're confident that the downside is going to continue, you can just buy puts, right? Like what the fuck does it matter if you were in it now or, 2 hours ago when IV was through the roof? IMAT didn't tank, just saying. I mean, I think everything did, right? But I mean, that aspect of it is true. Absolutely not, Heathdale. Might this be the beginning of a crash? It could be. We'll see what happens. I think for GME, we're heading for Dion. Why do you spy out you actually downs? Powell, well, pretty much after Powell said he had no intention to pause, we've been dropping like a rock. Thoughts on GME calls here? Way too early. I don't like it. VIX isn't reacting at all. I know. Spider, welcome to Billionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added to the country club.
Happy birthday, Gurk. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold it the float. If you are what you eat, that makes Gherkin the go. Hoping that you read the DD, cause when the shit squeeze, we gon' end up with the moon, man. Racks to the 510 weeklies, while I'm selling CCs like another fucking moon wind. Praise be to RC and the BY, please, cause I need GME to move soon, man. Got the man GG on the CNBC saying that he ain't seen no collusion. And we might be apes, but we ain't that joke. Motherfucker trade trades is pop.
Sorry, guys. I always forget to fucking turn that volume down. What's your PT for this relief rally moving forward? Already hit the top. We'll see how positioning plays out in the morning. We moved up enough towards 3,900. I need to see how much at 3,900 sold off. The positioning of the downside, I mean, it's still weak. We're not seeing like super accelerated movement down. Let me see if I have an update. I think 37.75 should find some support, and we'll see how it goes from there. Five days of downside? Seems a bit much. How's VIX not moving at all? Oh, because people are shorting the VIX. I even reminded you right away. Well, I didn't see it. Maybe you didn't tag me. What's a good way to build confidence? What did you do wrong? I let my call side print, made nice gains. But sold my put side as well, thinking the drop wouldn't be this substantial. I mean, that's just the correct way to close a straddle. You didn't do anything wrong, you just didn't profit off of both sides of it. Well, the last time Sanjeet showed up was before, what was it, August OPEX? Catching a falling knife can be dangerous, be careful. Yeah, you should be. As an early investor in only calves and sister site only librarians, I'm interested in your opinion on how this market-wide sell-off may impact sales figures. Do you expect the user base to increase? Yeah, as people are unable to afford to go to libraries or calf viewing sessions in real life, I think they'll turn more and more to home use, and I'm kind of banking on that. Do you trade crypto? Not really. I'll buy it if it's really cheap and sell it when it's not, but really, really rarely. Odds on entering Dole or Snap on this drop. How much did Dole take a hit? Dole. Hold on, let me take a look. Dole only moved down 10 cents. 2 cents. Sorry. Yeah, Dole barely affected by this. Only down 0.17% today. Sorry. Someone put side at a loss, went into a meeting, came out murdered. Didn't put a stop on the call side? Get some catcalls now, and wait till the index reaction is complete. That was interesting. The notes suggested a softening of the rate in December, but his comments didn't really align with that. Perhaps he'll walk those comments back. I'm wondering why. I feel like he was just like outvoted in the decision, right? Like I don't know if anybody else got that, but like yeah, the notes were super bullish. You know, implying that target rate for the year had been reached. JPOW didn't seem to agree, and kind of took a different took a different narrative there. I think they don't want to full on come out and say that they won't hike in December yet, right? And then, you know, as the market absorbs this interest rate decision, then they might get a little more dovish moving forward. I know Biden had a speech today, but I don't know what it was about. Is the movement on Upstart all active funds? Yeah, pretty much. I'm sure the shorts are taking advantage of the drop if they can. Can you explain what an MOC imbalance is? Market on close imbalance? It's like when the end of the day trade settlement occurs. So whatever imbalance there is in the trading and for the day is settled at the end of the day. JPAL mentioned the implication more than once. That means he's going to take the market out on a boat ride far away from the coast. We'll see. Actually, the SPY is dropping because the snowing stopped and the sun came out. I'm up 11% on Dole now. This is awesome. Congratulations, man. Did they close the put leg on their straddle yet? You had it drawn earlier. I think we saw some close off going into the meeting. I don't think all of them closed off, obviously. We'll see. I mean, we're starting to see a little stabilization here. What we really want to see is a little recovery as puts close out. And then another drop back to pick up the rest of them. So we may not see that today, but maybe into futures tonight. I mean, I knew JPOW wasn't going to back off of the interest rate increases, but this is a bit overreactive to neutral, which is basically what was said. Doesn't seem like a crash to me, so we're going back up from options positioning, or is that thought process wrong? We'll see. I mean, calls could be spooked today. They're not, most of the calls aren't super, like the leverage isn't super far dated, but it's far dated enough that I could see it holding strong. What this is definitely is a lot of near dated calls closing out, right? But also near dated puts taking profits. Most of the interest on SPX as of late is like 1 and 0 DTE. So it increases the volatility in the market in the near term. Yeah, JPOW went off script hard. Does it common to have a couple accounts, for one for DGen trade and the other is sell anytime it's green? My DGen account should be paper, I'm certain. I mean, I have my accounts kind of broken up that way. Why does he keep using the word implication? Because he wants people to know. Did we drop because you taunted Rockin with the initial rise? Well, I taunted him, but I also clarified that I was just taunting him until we dropped down to 83.30. Generally, the repositioning effect is pretty volatile. So usually, whichever direction we go, you know, we go the opposite way, right? And then, you know, volatility expands until the positions are closed out, and then it contracts again. I mean, I don't care. I closed my straddle when I taunted Walken. He would have had me just buy puts. Should buy GME CCs for 11.11 back in the attempt to resell them for higher premiums with FTD start. Buy my GME CCs for 11.11 back in an attempt to resell them for higher premiums with the FTDs. You could try. I mean, hopefully the FTDs are big enough to have some improvement on price. They may not be. So, I mean, it's only 1 day of ETF FTDs. I would say if you're if you're profitable enough on them that they're worth buying back, sure. Lagging indicator, I know, but these rate hikes haven't helped inflation at all. Hard to argue with JPOW. Yeah. Is the problem with rolling that you basically have to sell at and pay at the ask? Well, because the process is automated, yes, to a degree. I mean, you can choose, generally you can choose, ask, mid, or bid. But, yeah, that's the issue with rolling. Usually it's better to buy back and wait and reposition at a different point in time. So margin your life away on Upstart selling puts. I'm still not assigned. Will there be residual volatility worth straddling overnight? Possibly. I'm kind of waiting for the IV to drop or see if it drops on these nearer term calls before I do that. It's a little better, but not a lot. They're still pretty fucking expensive. These are coming back within a more normal range, like the November 4s. So I might straddle there, but I'll probably wait until like the last minute. I mean, the guy who had the 390s probably sold when they were up, or I hope, because I think it was just 2 DTEs. SPX Friday 3850s still just hopium at this point. Why didn't you cut them earlier if you didn't have a lot of why don't people do that? Don't put stops on your fucking calls if you don't have theta. No, 3850 isn't outside of, it's at the upper end of the range, but it's not outside of the range yet. Is this a rounded bottom breakout? It's some support. The beginnings of some support. Are you going to shed your 4100s or hold and see what happens? I've got a couple weeks on them. So I plan to stay in them for a little while at least. I'll average them down now that we've dropped. I'll probably buy a few more. I have a 105-degree fever. Go to the hospital now. Win by calls. Generally when they're cheaper. Finally learning a thing or two, Gurk. Waited until we stabilize at these 37.75 levels. Scalp 10 calls for 30% profits. Cheers. Nice, man. Congratulations. Is November 18th enough theta to see a bounce to the upside on the SPY? I think it is, especially with CPI next week. I mean, I'm definitely going to be eating into my theta, but we'll see. If I have to roll them out, I will. I thought the report was bullish. Yeah, the report was bullish, but when asked if he was really what turned it around, when asked if he was going to consider a pause in the rate hikes, he said absolutely not. Is this a bear flag? Not really. It's just support at the 3,700 level. Bear flags move up, right? Their buy pressure from the bounce weakens and then they fail. There's really not so much buy pressure here. This is more like short capitulation, probably like the 3,800 strike, causing the leveling out here. I don't think we're seeing a lot of buying yet, so we don't really have any significant uptrends. Is there a sign of up for upstarts between now and earnings next week? I mean, if the market moves up, it might get dragged up too, but that's it. Who is that reporter? Can we flame them on Twitter? I have no idea. Are the November 18 Apple running out of theta or good to average down? I mean, their theta is going to get burned up faster as they fall further out of the money. I wouldn't average them down. Am I going to cut them? Maybe, but I'll probably cut them at a better price. I have enough theta to cut them at a better price. I'll probably average down the Decembers, as long as we get some stability. You think SPY dropping below 374 before ripping again? We'll see. I mean, we gotta see how much this stabilizes. Yeah, that's a bear flag. This. Where you have like a steep drop into buy pressure that dies. But generally after a bear flag, you start to see more stability, right? I discover why I keep paper handing my options when they're green. I have beta mode activated on Fidelity. Wait, is that real? Is it Fidelity selling your options when they're green? Any idea why the puts being bought and sold right now are so deep in the money? We'll be seeing profit taking from puts bought at the peak back in December. I think we're seeing profit taking from puts bought more recently, but yeah. Assuming a good CPI print, how big of a move on S&P are you expecting since you're holding onto your calls? I don't know if I'm going to be holding onto them for a CPI print. I mean, I really just need SPX to move back up to 3,900, which, you know, I don't think 125 points is out of the realm of possibility. Don't forget that we have that negative net delta on the SPX again, because we slipped below. So, any buy pressure will be accelerated. So we're returning to that area where you get an overnight straddle every night, but in a higher range than last time. It's officially called Beta View, and no, they don't sell them. It's me not having enough tea. Oh. I mean, selling green calls is usually a good thing. if I knew that JPOW was going to totally disagree with the report he wrote, Fed hikes aren't working, and every major market participant knows it. Well, they've known it for a while, right? They get the same data. JPOW's pivot from the data narrative proves he's kind of losing it and simply wants to be seen as righteous before the biggest crash in market history, so he can say, I tried. Did he? And if he tried, he would have just bumped rates 10% at the beginning of the year. Would SPY 410s to the same expiration be a good way to mirror them since I can't trade SPX? Yes, but I wouldn't. The position's pretty risky now. Where would they like price to be for OPEX? Below gamma neutral. Do you think IV on GME will remain elevated into ETF FTDs next Monday? Trying to decide whether to sell CCs now with all the weekly spiking IV. I mean, I would just wait till you have the better opportunity, right? Is IV really spiked right now? I don't think it is. Oh, what are these? Snap. Can I set a stop on these? Awkward. When GME GN? I don't know, market close at this rate. DN, you mean? Oh, GN? Probably after ETF FTDs. We're dropping into close. Maybe. We'll see if we might fall to 37.50. GME seems somewhat stable right now, at least. Upstart still at like 20.50. I used to like JPOW. I liked him up to the point where he stopped sounding like you know what the fuck he was talking about. Does the price of Google dropping faster than your target time frame, Q1, Q2, change your entry point target? Let's see. It's getting close. I mean, no, I just have a buy order set at $85. I might trim the buy order back and save some more money on the side to DCA with at a lower price point during my target time period. Can you talk about how to play an overnight straddle briefly? I have like 5,000 times. You buy a put and a call at the money. Then you take the profits and close the loser. Can you milk the winning side for more? Sure, but it's risky. Yeah, I ate. I had lunch. Sort of. Supply chain issues is causing many companies to reshore production. The additional pressure on labor prices is not helping. Breaking script may be the first sign he's going full Volcker. I mean, he should have just done that already, though. It's now if he does it, he's guaranteeing a crash. See you later, buckled up, Jen. So the straddle is opened pre-closed, and closed at the next opening bell. Generally, yeah. That's why it's called an overnight straddle. Can you braid your hair? I mean, probably. With the market as volatile as it's been, yeah. Straddle is the same like Roller Coaster Tycoon. I didn't ignore you all day. I answered your fucking questions. Almost, but I didn't, and that's what matters. I mean, he also said if the SPX drops too hard, they can just raise it back up. You ignored me all day, but I might have deserved it. I don't know. I mean, look at this. All this downside and no Guybrush on the screen has me thinking Guybrush might be bullish. Can you run it overnight on anything, or is it better on the 24/7s? I mean, you can run it on anything. It's better on 24/7. I feel like at each FOMC, we see the market move in the opposite direction the next day. That's because of repositioning. Red today, big green tomorrow. We'll see. I've got time, right? That's why you buy time. November 4th or further out. I mean, you want to make sure that your theta doesn't all burn up overnight. So it's nice to buy them with a little extra wiggle room. If you buy the like 0 DTEs, then, or 1 DTEs, you eat up a lot of theta. Well, they would be 0 DTEs the following day, but you eat up a lot of theta overnight. So, as long as that's priced into your expected move, but it's something you need to remember. The more theta you buy, the better, generally speaking. But also the more move you need, like the greater range of move you need. Is a strong rebound out of the question this week? I don't know. I need to see positioning tomorrow. If positioning stayed strong through this, on this drop, right, and we only see a near-term sell-off in calls, then I'd be more confident for a move to the upside. But intraday, you can't view overall positioning. Streaming hood earnings. Kathy's been hoovering up shares the last week in her ARCs. Weird. Really? She's still buying into that company? Real wages question. Real wages have been negative. Do they normally stay negative during inflationary periods? No, normally wages will rise with inflation. Or they should. Corporate greed is intense in the US. I don't hear too much talk about a wage spiral. I would say wages have picked up, but only to the bare minimum. Which, is the way to counteract the inflationary pressure on people. But yeah, wages, were already set at rates that, probably haven't been decent since the 1990s, right? And so, their small move up has barely put them on pace with, where they should have been and by like 2010. They're still seriously lagging. Like the federal minimum wage should probably be at $20 or $25 an hour. The most frightening thing that haunts me is having to watch these price movements without having your commentary. Thanks for the voice through this. Yeah, no problem, man. How many margin calls do you think Kathy has gotten this year? Probably none. She has a ton of capital. Although everything she buys gets shorted into the dirt. Yeah, wage increases should have become entrenched. But we'll need the only way that's going to happen is like if the House, the Senate, and the executive branch are all, and even then, it's unlikely. $20 an hour, socialist? It's not socialism. Wages have been decoupling from productivity since the late 1970s. Yeah, roughly. Thanks, Potato Tom. You see net going up after earnings tomorrow with the market close? Maybe. I did it. No more assignment at 27. Congratulations, man. Ding ding. Yeah, sorry. I was looking at something else. Peep Qualcomm. Oof. Any news yet? They have earnings tonight. Average time my XPX score calls in order to make exit a little easier. I think we'll come back a little. I agree. I think that's reasonable. NVIDIA puts are gonna be nice. I picked up 4 contracts today is all I got filled on. Wow, what the fuck happened with NVIDIA today? Oh yeah, I only got filled here? Well, I got some contracts, I guess. Roku. Oh, nice. Oh, no, never mind. I don't know if any of these are big enough anymore to make that big of an impact on SPX. Don't forget, SPX will be helped out by the rest of the oil earnings as well. These massive candles across the... I don't think there are... I mean, these aren't massive. These are barely any volume. Cloudflare has earnings tonight. Could be interesting. We'll check it out. Anyway, yeah, so I know I spent the last hour talking about this, but I'll go over it one more time. As far as SPX goes, we'll see how much of this drop is the effect of repositioning versus the effect of, actual bearish sentiment coming in. Remember that ultimately at the end of the day, the 7.5 BPS hike is neutral. This is what was priced in. This is what was expected. I don't think there was too much bullishness that came into the market with the idea of a Fed pivot. I think the Fed has been very clear, more than very clear, that they have no intention to pivot at any point, regardless of what, letters are pen palled to them by senators. So yeah, I mean, the Fed continuing with its 7.5 hike. We'll see if, this pattern of 7.5 hikes is actually having a real effect on inflation in the next report. Remember, we had slightly lower inflation numbers last month. This coming week, we may see even lower inflation numbers. If we have a trend of lower inflation numbers from that peak, that would be very good. And CPI is next week. But I do think that we could see this rally back up after, puts take profits in these lower ranges. I still don't think that the downside is too heavily leveraged. I mean, there's some leverage that probably built up today, but I still don't think it's a lot. And we'll see how that all plays out tomorrow. As far as GME, Upstart, Fubo, they're going to continue to probably chop or trade with the market or like the indices at large until the ETF FTD period, where we may see some price action. After the ETF FTD period, I expect both of them to go down fairly hard through at least the beginning of the SLD period, and then we may start to see like a little bit earlier covering of OPEX due to the holiday in November. But I'll update people more on that as we get closer to it. We're still about 2 weeks out, so thank you guys all for tuning in. Have a great night, and I will see you bright and early tomorrow morning at market open. FTD period starts tomorrow and continues through November 10th, but the peak of FTDs for GME is on the 7th. Have a great night, everyone.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
It's yours?
No,
Mother said she found it in your closet.
I don't know. One of the guys must
have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult.
Sit, Crean, sit. Good dog.
Hydrate!
Hydrate!
Did you get any of that?
It's a good show!
Not an advisor. Frigulon.